folks, I'm excited to tell you about my new sponsor, Black Bull Markets. They are based here in New Zealand, and they're a New Zealand regulated broker who offers up to 500 to 1 leverage and over 26,000 tradable instruments. You can trade Forex, shares, commodities, indices, crypto, and they're an award-winning brokerage firm here in Asia Pacific with dedicated 24/7 client support and no minimum deposit. To trade with Black Bull Markets today, click the link in the description below or in the card above.
Good morning, good afternoon, and good evening, everyone. Welcome back to the stream. Yeah, we are taking on the Fidelcrest challenge today, and today we're going to hopefully pass the challenge. This is my aim. But first, as always, we're just going to check the news. So let's go into investing.com, see what they have to offer when it comes to things. Just whipping up my phone here. Always have to have the free advert, as you know. Today, there is nothing. There's no news. But you know what news is? News is, over the weekend, there's been a massive change. All right, there's been some collapses in banks. It's going to be hyper volatile today. The volatility is going to be off the charts. But disregarding just the volatility, why are these things being put in place? It's to confuse some of the traders. Sup, Natology? How's it going, my man? How's it going? Nice to see you here. Welcome back. So today is hyper volatile because everyone's confused about the time. On the 12th, so that was like 2 days ago, on the Friday and the Saturday, there's something called daylight savings time. Now in New York, this doesn't happen everywhere in the world. It only happens in certain like countries or even certain states within countries. And daylight savings time basically is they take time forward an hour or time backwards an hour just to get more sunshine. So when it's summer, they take time backwards so they can have more time. And then when it's winter, they take time forwards. So it's like less time, but they get more sunlight during the day. Now, where I am in Australia, in the state that I live in, we also have daylight savings time, unfortunately. So I have to deal with daylight savings time 4 times in the year. It's ridiculous. Anyways, my nose is a bit runny, so I'm just going to get into the charts. Hello, Legs. Welcome. Nice to see you around. I'm just going to put up my chart over here. All right, so we're going to look at the DXY first, and I've got the daily up already. And as you can see over here, this is just the 1 minute. So what we're going to do is we're going to put up the hard time frame structure and see where we are and what we're doing in that time. Now, because it's daylight savings time, we have 26 minutes, before it is, before the 8:30 and 9:30 liquidity has been set. That's what they're doing right now. So if you're confused about the markets being volatile right now and moving, this is why. Okay, so we have our big structure. As we said the other day, this buy side over here has been swept. Okay, as soon as it takes a higher time frame objective like this, massive buy side being taken, what's it seeking now? It's seeking sell side. Hello, alternate strengths. Welcome back. Nice to see you around. Okay, so buy side's been taken. It went into this volume imbalance. It didn't actually set a body in that volume imbalance. So that for later on is an objective. Where I'm looking at is on the shorter time frame. I've already pulled up this volume imbalance over here. That's just been created over the weekend. And we have this volume imbalance that was taken on Friday. And then this one over here, which has just been taken with the sell side today. Okay. Underneath that, we have this volume balance that you can pull through time. If you're seeking lower prices, it's going to go, it's either here or to mitigate this very slight fair value gap that's right inside of there. Right inside there, if you zoom into there, there's a split between that wick and that wick there. That's a fair value gap. So you can do that. High time frame objective though, I would see it going past that and going down into this larger fair value gap, which has sell side liquidity nestled right at the inside of it. Nautology, I see GU for buy, if not mistaken. So today, be careful, all right? Because there's been this big banking stuff. There's something that I noticed that they added in, and I didn't. It's not on the news. It's not on investing.com. You have to actually pull up Euro USD or GBP USD and look at the charts and be like, well, what news do they have today? Closed door Fed emergency meeting at 11:30. What is that? It's an emergency meeting. And then there's a Biden speech on the banking system. So expect manipulation in the markets today on a big level. Not just because of daylight savings, but because of these meetings that have been put in place. All right. The Fed emergency meeting is due to all the banks. Basically, it's real banks being run like they're crypto. All right. So these banks, people are bank running the banks. And what I think the Fed emergency meeting is about is it's about providing liquidity so that all the people that have deposited into those banks are, in essence, all the people that deposit into those banks can get their funds out. Now, that can take a long time or it can be a short time. Big thing you have to know is, where does the Fed or where will the government get the money to shore up the liquidity? They have to print it. It doesn't just come out of thin air. So that means that dollar down because dollar's been printing and everything else go up. But I think that it's slightly, how do I put it? It's slightly suspicious because this all seems to be too much of a coincidence today. So let me just bring that up again. So those are the two meetings today. Now looking on Euro USD, I also have my high time frame on the daily. Okay. Now on the daily, we have again this volume balance on the high side over here. We have now set relatively equal low. So this sell side over here can be moved to the next section, which is just down here. That's our next sell side objective, which is literally here. So that was just taken and it's coming up. Okay. What's left is a huge daily opening, weekly opening gap. So let me just put that in, weekly opening gap. There's a huge weekly opening gap over there. And we have all of this as well, weekly opening gaps. These fair value gaps and stuff are within the weekly opening gap as well. Yeah, of course, Biden's going to be speaking. But whatever he says is basically, it's going to be in relation to what the markets are actually doing themselves. Sorry, if you can hear me, hit the thumbs up, like this video, and also tell me if something's wrong with the audio, because last time there was an issue with the audio in the beginning of the stream. Sorry about that. I'm also going to put up the end dogs. All right, so we have this weekly this opening gap from back here resting within side of here. We have, I like to see that there's a whole bunch of them near each other. What does that mean in my eyes up here? Is that you're expecting price to target those because those have higher liquidity than one that's by itself. So if you're looking down here at the bottom, if you see these two over here, they have, well, this is a bit skew, but they are not necessarily on top of, like, overlaid on top of each other. All right, cheers, Nautology. Appreciate it, champion. Now, going on to the higher time, we are on the high time frame. I'm just going to take the end dogs and the weekly away. I'll just keep the high time frame objective in play. Now we're going to the US 500. Now here, I don't need to see high time frame objective. You kind of know what's going on. Price is going down, it's going down, it's going down, it's going down, and it's come back up, and now it's going down again. Shocker. Okay. Most of the markets, my whole objective is for the indices. The end goal for me for this is, see this over here is basically I call this is the COVID crash. After that, they just started printing money and everything started coming up. Now, to rebalance that printing of money, they have to drop it into some kind of a discount. So from here to here, anything below 50, as you can see, 50, it bounced, it went up. But it has to go into a deeper retracement for it to actually have offered enough fair value. Because this, you could see in the longer time frame as just like a super spike up. And especially with news today, like the market could actually just continue crashing down over the next week. My objective would be at this line over here, underneath these two relatively equal lows, and down over here. These are, and you can see how perfect that those lows are in relation to this fib over here, the 21 and the 38. So that would be the 79 and the 62% retracement levels on your traditional fibs. Okay, that would be like major levels that I would be seeing, or price that I'd be seeing price draw towards. Okay. Just to balance this little bit of price action over here. As you can see over here, it went all the way up. I can draw a fib from the bottom to the top of that market. And if you draw the line out of that, you have the 50 over here. And then you have the 38 or the 62% retracement. That's where it came down to within the COVID crash to go up. You can keep doing this throughout the whole history of what's been happening. The moves are all mitigated in a way. But now this is a larger mitigation where it's going to drop. So everything else is good. Everything else is seeking. What's up, Don? Welcome back. Welcome back. Good to see you around. Good to see you around. So yes, those are basically the levels that we're looking at now. Today I'm trading. Like I'm actually going to be entering this super hard. You entered a GU sell this morning. Easy. Beautiful, beautiful, beautiful. I'm glad you saw it. I actually wasn't on the charts because it wasn't, again, it's not my time. If we're looking at GU over here, pull this back, going to the 15 minutes so we can see this. This was the other day. We had buy side taken. That was beautiful. It was actually taken twice. See the height, retraced, came back, and then actually on GU, looks like we've broken structure. So the market's all giving us these kind of like mixed signals in a way. This is too much. This is like too equal over here. All this price action on GU, that's way too equal. I would expect this as buy side on a higher time frame to get taken, for it to, after it shoots up wherever it's going, for it to actually slam down, because you have all of this liquidity down here that's been left. If you have been following and are aware of my strategy, let's go in 15 minutes, put it back and go over here. We're looking at where was the 8:30 open. Okay, so like just like the other day, we have the 8:30 open, which is over here. We have the lows over there. Let me just make that into a 1 minute, a slightly snakier chart. This for me is sell side, okay, on the larger scale, because we have gapped up. There's a massive gap in there, in that weekly gap right there, huge, right there. That weekly gap is absolutely massive. Okay, now we're going up in price. We're testing this buy side, this larger buy side liquidity pool again. We couldn't even shoot above here, but I'm actually expecting price to sell later on. Okay, so we have sell side and we have buy side. Now this sell side is an objective later on. Why would that be delicious to me? Because scrolling down into this chart over here, this might seem like it's choppy noise. For me, it is liquidity. All right. This section over here is perfectly between 5 and 6 o'clock on your daily. All right. Right there. 5 and 6 o'clock. That's your daily. Now there's a lot of liquidity racing underneath here. There's a lot of liquidity racing underneath these equal lows over here. There's a lot of liquidity racing over here. There's a lot of liquidity racing all the way. Now this is being built up. Why? Because later on, they're going to come down and they're absolutely going to thrash this market into a complete drop to go and seek all of this liquidity over here and just head down for the sell side. So let's go into the 1 hour. Let's go find where that sell side is. There's your sell side. So it's building up for a purpose. It's coming to fill this up. It's going to come up. It might actually continue going up into this section over here, which I've already labeled. There's an order block over here. And we also have this massive fair value gap, which is seen into. But it doesn't necessarily need to go there today or tomorrow, okay? Because these moves are big. This is like longer term things, all right? But my ultimate objective would be for it to go down here and for it to go into these two fair value gaps. DXY, that would be looking at the buy side. Right now, it seems pretty bearish because you have monster red candles going down and they have broken structure. So it seems to be quite bearish. But we have this fair value gap that needs to be mitigated, not mitigated, but it needs to go up to all of this buy side liquidity. And then from there, if it wants to continue going lower, it will continue to go lower. That's honestly what I see. That little fair value gap, that's important. Okay, so where are we in time now? It is 12:17 in my time, which means that it is 9:17 in New York. This move, where we are right now, it could start from over here to go higher, to go lower, or it could start somewhere over here, depending if they want to go for this liquidity over here right now, or they're saving that for later. But right now it seems, I don't know, everyone I think today is in a bit of a jumble because the markets are doing what they're doing. So we just have to be super, super nimble. You have to be on your feet and you have to be trying to see the future because that's our job. See the future. Let's put the high time frame. Yeah, there's a whole bunch. You see this, what I was talking about before, about liquidity resting within liquidity. There's a whole bunch of, there's a daily gap, weekly gap, within a weekly gap. So you got 2 weekly gaps and 2 daily gaps within each other. That's quite big over here. So it's 1, 2, and then you have 1 and 2 from there. All right, so liquidity is obviously going to go here and set something up, and then it'll either continue to go towards the next weekly gap or it'll bounce and then go up to this massive one that has been left in price right there. Right here. That there is huge. But it could not be today. It might be tomorrow. So we'll see. We'll see. Okay, let me close that off. Pull that to the side. And let's look at gold. For you gold traders out there who like to gold it up. So gold is the opposite of dollar. All right. When everyone goes risk on, it means it's gold time. When everyone goes risk off, it means that it's dollar time. All right, so right now, where are we? Actually, gold's been moving interesting. Where are we in price now? We're still hovering around the 1800, 1900s. Yeah. 1900. Using the round number theory, As soon as it's reached 900, which it has, okay, you are expecting some kind of retracement bounce, something from there to go lower. And then we could hit the 80, which is over here. Oh, how perfect is this price? It's just too perfect. 80 goes up to almost, comes back down, goes up to 900. If you look over here, we've gone from 50, should be back over here. Here's 50. It hovered around the half level between the round number and the round number. 50, 50, 50, 50, and it pushed up, pushed up, pushed up, and then we're going up to the, didn't quite reach the round number, so it sets up liquidity and goes to the round number. Interesting. Okay, so I'm obviously not the expert in gas. It's just something that I've taken into price and witnessed. You can draw enough gaps to find confidences in anything. Okay, but what they are is they are a point where the algorithm has gone previously checked out. Now these are times, or not times, but places in price where there are how do I put it? There are the algorithm's gone to those points and price them in a way, so they will have future relevance, even if it's from 12 years ago. There'll be a weekly opening gap, so you can go in something like the DXY. Let's go look at the weekly. Okay, and you can go look at price where it was before. So here we are in May or in June of 2002. Now I'm sure that within where we are right now in the week, there was some kind of weekly gap somewhere over here where price is right now. Go up here. Oh, look at that. From the close over here to the open over here. Let's drag that out in price and pull that sideways quickly. That was from 21 years ago. Funny that. So yes, if you backtest enough and go through time, you'll see that all these things actually are not just coincidence. So if dollar's seeking higher prices, which I actually think it is, I'm of the opinion that they're going to carry on raising interest rates because we have a void over here in price. There's actually an actual void right there. I'm just going to say it's the 1 minute, but it's not the 1 minute, it's the weekly. Right here in price, it has never come back and tested and filled in this void. Or the void underneath it, right over there. So I'm actually of the opinion that dollar needs to go higher, a lot higher. Yeah. Gabriel, if you are a fan of ICT, you know that he's been doing this and trading the markets for 30 years. Okay, so that means that 01, 1993, this is where he kind of started right there. And he's seen price go through a massive leg up, massive leg below that leg, and he's seen it continue to do his thing. So if we look on the massive time scale, we have sell side over here was taken. We have his classic OTE right there. That's his OTE right there. Okay. If you were holding for 20 years, great stuff. All right. You could have taken a trade from here and been holding all the way up to the moon. But now, what are we seeing? So sell side was taken. After sell side gets taken, the next target obviously is buy side. So now this is buy side right there. That's buy side. Even though prices come up, it's done all this, come down, come up, come down, and it's come up again. It's broken this. It is, as soon as it breaks this, it needs to have fair value or have fair value within this, which means 50% or slightly lower, to go and carry on going higher. All right. So you can see his models within any time frame that you go into, whether it's daily, weekly, on the second, monthly. I'm sure it's there. I mean, I don't have this doesn't have charts going back years. Let's go 12 months. I mean, this only has dollar literally going down, up, down, up, down, up, and then where do we go from here? Who knows? Because it only dates back to 67. It doesn't take it further back in price. When it was when DXY was linked to the to gold, because it used to be that X amount of dollars equaled X amount of gold, and then it decoupled from that, and then it became what it is now. We're in prior time. We've got 5 more minutes. Let's go back onto the 15-minute chart. Okay, so this gap right over here is the nearest. If price doesn't like just drop to hell because of what's happened on the weekend, even if it does, this is a very important level, which you'll see is right here. It's a weekly opening gap right there. You can see I've drawn it on, but I've drawn it on not just the past 5 weeks, but I've drawn it on for the past like year. Okay. Right now, what's interesting is looking at Euro. We've just broken the first break of structure. I call it break 1. It's not validation for me yet. Yes, Don. Let me just go on to GU for you. Yeah, as you can see, I'm only for GU. You have all of these equal highs over here. Okay. Now let me put that on one chart over here. That's buy side. You could, if you're looking at the whole leg, it's taken buy side over here, it's taken buy side, but we have relatively equal lows, and we have this buy side ultimate over here into the fair value gap that's just behind it. Okay, so that could be relevant. It could shoot up here and then go down, or it could start from here and go down and form what's classically known as a triple top. All right. But in my opinion, this move, there's so much liquidity on GU from Thursday resting underneath these lows and resting ultimately underneath here, where this little change happened on Wednesday, where it went up, down, up. That is a classic like reversal signature where it's like, okay, it's gonna start. Now that's gone up here. We're waiting. Sure. For me, it's not the time yet. So we're gonna go into our chart. This is the 1 hour. Let's go down to the 5 minutes. This is just an arrow. Remove that. Remove high time frame, and let's remove the end dogs, and we'll see. Price looks a lot cleaner here, especially with just sell side, and you have your weekly opening and closing over here. So where could we be looking after this gets taken? We could be looking at it seeking up here and then going down, or it needs to fill in this range that's been left over here. So this range over here, that is a target because it's unfilled price. The algorithm wants to go and fill that price in somehow. It needs to fill price in. Okay, so just go into this quickly. Where are we right now? 30 at 25 at 30, which is right here. This right now is initial sell side. And we're not at 9:30 yet. Oh, wait. Skate southward forward, the mystical algorithm. So the algorithm, in my opinion, is basically a list of commands for when market isn't being manually intervened. All right, because just like everything, you still need it to run. You can't be operating your business 24/7 without a break, right? Like that's why someone like Trading Nuts has his robots and all that kind of stuff, because it kind of trades for you without you needing to be there. that is in of itself, a robot is an algorithm. It's the same thing. There's multiple huge funds. They have like algorithms hitting on, like they'll literally use the 1 second chart. And I'm just going to this quickly. And what they'll be doing is that every little shift in price, they'll be like, okay, let's say 9.55 or 9.58, they buy. They sell at 6.58. 68, 78. So they're literally looking at, this is their profit right here. That's their profit. And as it goes up, they buy again. As it goes up, they buy again. Now, crypto tried something called grid trading, where they set up a grid, and as it was going up in price, they would carry on buying. And as soon as it started coming down, it would sell. It would liquidate all those positions and then start selling, and then liquidate all those positions and then start buying. So they were getting there. It seems like order flow is actually bearish. I'm looking at this right now on the EU, because what have we done? There is, as I said, price was just breaking structure right here. Okay, as it was coming down. Again, I'm sus, because 9.30 just happened. So this for me is buy side liquidity. Okay, and if you look left, what's left of that buy side liquidity? You have this huge section of price right there, and also relatively equal highs up here. Okay, so I don't think that this is the high of the day. Definitely not. Yeah, everything's gapped up. So now, because of that gap, all right, what we're looking at is we're looking at where price was set right now at 9.30 closing of the candle. All right, so that's right there. And we have to drag that back to where they closed price on Friday, which is over here. This is what it would be referred to as your electronic trading and normal trading hours gap. Highly probable. Sorry, could you move your toolbar on the upper left? Oh yeah, sure. I'm on Euro. But you can see behind here, it says Euro, USD. I put that there. So if I'm on DXY, you can see it right there. And GBP, it's right there. And gold's right there. And US 500's right there as well. Just behind, a little bit of gray. I don't know. I'm kind of colorblind, so I can see that. I don't know if everyone can. All right, so now we have that DXY, same thing. We have the 9.30 on the 1 minute, right here. Here, and we have price where it opened, where the gap was, where it opened today is over here, and that's where it closed on Friday. So that is your electronic trading hours for dollar. So dollar looks like it's, in my opinion, it's going to go bullish. USD, I'm looking bearish. GBP, same thing. I'm looking on the downside. US 500, I'm looking at the buy side. Where was the open? The open was here. We've come down, it could go further. It's repriced, but it's not repriced for the American traders. So when you're thinking, you need to think of every session has how to put it. Every session they have different traders. You have traders that only trade during New York, and you have traders that only trade during London. Now they will take price back to the previous close of their session during their session. How I explain that, not necessarily with the indices, especially the ones connected to America, but you can look at Euro USD. What time is that? It was 11. Okay, so here's 11. Okay, that's why I have my 11s on the chart. Here's 11 o'clock. Where did price gap up to? 11. Why? Because during Asia and then following on during London, it needs to go to that price because that was the close of London session. Today, we're not at 11 yet. So that is, if you just remove that and put in my 11s, which is right there. No, don't like the look of that. Okay, put in my 11s and we look at where price is. Every single day, it's the same thing. 11 o'clock, that was the evening, but let's go look at the morning. 11 o'clock, that's when London closes. What does it want to do? It wants to try and come back to that price. So it goes up and it goes back down. It gets resisted, it comes back. We have a big gap over here. I'm actually quite bearish. Okay. Now we have, this is 11. And we have the next day, 11 o'clock, which is now today. Okay, where it goes up into, and it's actually just stunning. It's stunning. So I expect at least 50% of this range on both GBP and Euro. So the same thing happens, like Euro USD and GBP is relatively similar. You can do it the same way, at least 50%, which is right over here. This price over here, that is 50% of that gap, as you can see. Okay, what's just underneath that 50%? The 8:30 open, sell side liquidity. I know, I see price in a completely different way to everyone else. But again, we might have price bouncing around a lot. Let me just reset this. We might have price bouncing around a lot today. Yeah, it's broke a second time now. So this for me is high confluence that is a market structure shift, because if you go into the 5 minutes, it has broken that red candle. If you see every other time here, this red candle doesn't get broken, red candle doesn't get broken, red candle doesn't get broken, blue, it goes red and then drops down again. It's high confluence that it's going to sell. My fib settings, I'll put them up on screen quickly. You can see I've got 0, 21, 38, 50, 100. And then I have 150, 200, 250, 300. So all standard deviations. So 250, 300, 350, 400. I got 400 max. All right. Now, if you're looking at that on the classic one would be 0, minus 50, minus 62, minus 79. Let me see. Does ICT have anything to say on this on Twitter? Oh, he does have some notifications. I'll be studying how we trade independently this morning. No distractions. Okay, so it's basically giving us full reign to do whatever we want. As long as we are... How many pairs do I focus on? Well, welcome to the stream, first of all. Give a nice thumbs up if you are finding anything interesting in here. I actively trade Euro USD and US 500, only those two pairs. I look at GBP for bias in a way, if it's moving the same, like together, and then DXY as opposing. Gold is just is like a fantasy. I look at that and I'm like, this just moves. It's like a massive move. If you're able to get into these moves somehow, like big ups, big ups. From 9:12 in gold, and let's just look at the 1 hour quick and I can check my time. Okay, I still got 20 minutes. We're right now within a fair value gap, a huge fair value gap. It could go from somewhere there, but you just be careful of the one above it, of the massive fair value gap above. Looking at this, why is it doing that? You have this whole section over here. That whole thing right there is where it changes structure right there. That is your order block, like your bearish order block. So you could actually label that if you put it there, but you're also looking at the bodies of those candles. Look at the liquidity that's just above there. And if it seeks those equal highs in gold, you would be seeking for it to go higher. And my opinion would be either looking at this fair value gap behind here in that big one, or you're looking at this fair value gap over here, which could see price looking at this fair value gap coming down. So this one seems quite likely from here to here. That seems quite likely, but there is equal highs there as well, so it's choppy chop on J. All right. On the buy side. But I don't think it's going to come up to there. That looks like a huge shift in structure. I'm quite bearish actually on all of this, on everything. I've got a very bearish bias today. So, Wally, yeah, man, I'm in Melbourne, so it's rough right now. It's almost 1 o'clock in the morning. I've changed my whole life to fit trading, especially this London session, because it's fairly predictable. And yeah, it's rough. So looking at gold, all right, I don't just look at the lower time frame, especially with gold. I look at that gold. You need a higher time frame perspective. So if you're looking at the 1 minute and you're thinking, oh well, what happens? You look back, you look back, you look back, you look back in price. Oh wait, it stops you out before you can even get that far back in price. So what's your reference for that? You would have to look at a. But from this fair value gap over here, you could see a rejection. But I'm looking for, if you're doing all of this, you're looking for confluence in everything. So right now, I still see that the euro is going up. Okay, so let's just go. I'm on the 5 minute right now. I have my buy side, which is set right there, and I have my sell side, which is already set as well over here. And then looking left, I'm looking at what's next to it. Those equal highs are scrumptious. All right, it's a whole bunch of liquidity. Took both in Asia. It took the highs of Asia and it took the lows of Asia. Sure, Ali. What do I think of the weekly fair value gap? The weekly is today. So I take that off, all the white lines go away. These are my weekly gaps that I put in place. So now I'm waiting to see if price wants to an euro on the 1 minute. So here you've had your break one in structure, And then this to me is like a confluence of a market structure shift, but it happened not in my time frame. My time frame is from 9:50 until 10:10. And if something happens in there, then I'll be looking to take a trade. Before that, I consider it to be manipulation. All right. If I was looking at that traditionally on the way I do it, all right, right here, okay, I'd be looking at this high, possibly this fair value gap right in there, going into this lower fair value gap over here, but that wasn't held in price. So I keep on looking this way because I have my actual exchange on the left side over here on my left screen. And I'm looking at the volume imbalance and stuff within the actual broker. So this, I don't trust what this is looking like right now. So I'm waiting. Today, we're going big. I want to actually put it in here. Risk balance, no. Risk of balance. Going at 1 TP. Close at 100. Cents. Cents. 100%. I shall keep my 2. 50. 50. 50. 100. Set at 2%. Right. Going hard and going big today. Just invite me on what's it called? Twitter at the only Gentsla. And yeah, I'll put it here. We'll get from there. Now, what you don't see is my trading chart thing, because I'm using the what do you call it, in the space that we're streaming with Trading Nut. It allows me to have a camera and to share one of my screens. It's a little bit different. I'm used to streaming with a service like OBS, and with OBS you can have multiple scenes that you have. So you can have like the camera I have right now on. If you look at the bottom left, I should just make it 1. So you see this screen right over here. I can change that. So right now you don't see anything, but if I pull this up over here, you can see that my trading thing is up over here. And that if I was to take this one and put in, no, not that. Add something to this, no, minimize. But I can bring up my actual chart on the right hand side as well. But I'm not using that right now. I'm just using my face cam section of it and then pulling up the window within, unfortunately, but it's okay. It is what it is. It's life. So just follow me and I'll follow you back. Today's the big day. We have a fair value gap over here that gets disrespected. I don't know. I'm looking at these highs over here. They seem rather equal, and we're coming within our time zone where I expect a macro to initiate and then kick in. Awesome. I'll get on it later after I've finished here. But right now, I'm just watching price. Gork, what do you think of the order block on GBP USD 1 minute before the up move? Yeah, the window of time that I refer to, let me just minimize this. The window of time that I refer to is 9:50 to 10:10. 1 minute order block on the 1 minute. There's a lot of order blocks. So there's one over here with that shift. That's your last down close candle. You could even look at this one because it's the lower one. This is your order block. That whole section right there. That's your order block. And then the next shift happened over here. So you're looking at that whole leg. That whole leg is an order block. But the last down close candle before the lowest, before the bull one is this one, yeah. So that would be your order block. If you that's the up order block in this up move. These are your two order blocks. Because you're looking at the shifts. Okay, so if you're looking at a super micro scale, all right, you're looking at this as being your last down close section, okay, before the up movement. So this is not an order block. It's from here. Okay. Now, as soon as price gets that whole order block gets respected multiple times, for me, I would want price to from there break higher, and then you set your new order block, which is the last section before the bullish, before the blue candle. So that is this whole leg over here. As you can see, price respected that beautifully every single time to go higher. Right now, same thing. We've just gone higher. What is the last section before the bullish candle? Is this little section of price right in here. So we're not actually bearish yet. These would all be considered bullish order blocks. And you can develop your own trading model based off of that as well. I say order block plus, and it's blue. That's how I label it. Like look how beautiful that's respected. 1, 2, 3, 4, 5, 6 times to get into that bullish move. You know, amazing. I love looking at this. So the last section, we've actually come down over here, okay, and we have broken past here. Now, if you're looking at this on a higher time scale, okay, let's look at the 5 minute, for example, you are still considering this to be a bullish move. But because we've just taken out that liquidity, as soon as buy side gets taken, what happens? It leaves a nice fair value gap right there. Okay, that's beautiful. If you go into the 1 minute and you look at price, I don't have GBP on my actual chart. I'm pretty aggressive. So breaker structures for me, I have a two stage kind of model in a way where I have a break of price, and it has to break the second low down here for me to consider that it's going to start going lower. So what we're looking at right now is that it's left this beautiful section of price over here unfilled. So it could snap into there and come lower. If that happens, then you're confirmed as going deep in price. Yes, Rafi. I love price action. It's like watching a movie. I'm looking at the same move actually play out right now on the Euro USD. Let's check what's happening over here. Check what dollar's doing. Dollar looks like it could go My stop loss would be above the nearest. I in with ICT. Oh, this is a big bullish move though. For DXY, I love it when price does this. This is a wonderful thing. It gaps twice. See this gap twice, and then it's not gap twice. What are we looking at? All of these little gaps inside there. That's where price is kind of drawn towards. So if you see here, look, that is perfect. No, don't want text. Text can go away. Right over here, look how perfect price is respecting those levels. So in this circumstance, if you were trading, okay, and you see that price, so you say for example you've entered your trade off of here, and you've put your stop somewhere down there. Now you have 1, 2, 3 plus fair value gap in the middle between here and here. You have a fair value gap from here to here. Those are all different price actions. 1, 2, 3, 4, 5. I have my stop just underneath the third one. 1, 2, 3. That's where my stop would be, to be conservative. And then our targets, however much it is. What's breaking higher? Going into, again, this section over here, I'd be looking at least the consequent encroachment, which is the 50% right over here. All right, that's what would be my smallest projection, but it might not start now. It might start soon. Because I'm looking at how price is being manipulated right now. We've set equal highs and we have lows. We don't have any form of breaker just yet. Lower, higher. The breaker is expected going to the buy side. Higher, lower. This little section of price. That's your breaker. Right there. My views on US30, my views on US30 are relatively similar to US 500. So right now, because we are underneath price over here, I said it before, but I was expecting price to go to the buy side at 950. Yeah, somewhere in here. As soon as that gets reached, we'll see what happens. See, right now, this is another thing I love seeing. The market is waiting. Okay, it's waiting. It's waiting to hit this, and then they'll see where they want to go from there. As soon as they've made a decision on US 500 or NAS or whatever it is, then it'll have caught up to the rest of the markets, because the rest of the markets are above their opening price, apart from US 500, which is below its opening price, closing price for Friday. Well, there's so much liquidity resting underneath here on the short side. Honestly, today's manipulation day. But just remember that it might go into a seek and destroy model today, because there's a meeting happening over here. Closed door Fed emergency meeting. That means that everyone is scared. They're so scared of what's happening to the banks. Yeah, they don't know they don't know what's going on. But us, we do know what's going on. It's fairly simple. Price hasn't come back to the weekly opening gap, has it? Over here. No, it hasn't. So we're bearish on foreign currencies until that happens. Literally. That's it. Right now, as you can see, this fair value gap is being respected. See what happens in price. Is this shift over here, we're looking at that is your breaker, and then your order block would have been this one here. Bearish order block. Now it's also left in euro a beautiful little fair value gap just inside of here, which has been filled. That's not the one. There's a volume imbalance just in here. I'm gonna close. What price is that? 7091 and 7088. 7088 to 7091. Right there, that is a volume imbalance. But you don't see it on this chart. The reason why I haven't done anything with this yet is because if I take the low from here, these equal lows over here, to up over here, it's only given us fair value to this level on DXY. I would want to see that come back further. And especially with these whole bunch of equal lows that have been set down here, I'm expecting price to come down on DXY, which means that I'm expecting everything else to shoot up. Because during this time, I have to see where the market's going to take me. Do I look at COT reports weekly? The COT reports are interesting. I actually refer to them bi-weekly, every 2 weeks, because sometimes it's the same. And I find that my analysis tends to lead. It's actually, I don't even need to use them. I don't use them for bias. I don't use them for anything. Yeah. So again, I'm going to pull this to the side. I would want this to be taken high time frame. Let's go out onto the daily. Where we are right now on the daily, looking left, we still have this big bold line over here. That is 50% of that candle there. So it's consequent encroachment. So 50% of that 50% would be here. So there's multiple different levels that it can go to. Especially with these equal highs, which are resting right underneath that 25% of that wick, and then 50%. And then of course we have we're sitting within, we haven't bounced off of that. It's gone up from where we opened today. It's gone up. Might continue going up, and we might only be looking at a trade tomorrow. If it doesn't come and fill this back in during the American session, both morning and afternoon, I'll be looking at either Asia or London for it to swing back down. And now we're within that. Actually, this you're doing DXY. This is like a snipe. So I'm busy looking at price right now. We're within the fair value gap on euro. So you see what's happening in price within this fair value gap right here. Euro, it's the same thing. So then just remove all of that. Go into the 1 minute. We're within that breaker, within this fair value gap over here. GBP is the same thing. It's inside of that fair value gap. I'm actually just looking to see what price wants to do, because we're not quite there yet at 1010. I have to wait for 1010. And this still needs to get back up to the weekly before I can do anything. So my social media. So why wait till 1010? Because there's been so many times that the manipulation is within 950 to 1010, especially on euro pairs. So we're looking at this over here. Okay, we have 950 to 1010. For me, that would have been enough confluence of breaking this structure over here to go higher, to look at this to take literally a 5-handle move. Like if you, like that's why my prime thing. But with Fidelcrest, I can't trade the US 500 just because the spread is like 2 handles by itself. So if I'm taking a 5-handle trade, you get 3 handles. Well, you lose 2 handles entering, and then to exit you lose 2 handles. So I only get 1 handle. No, it's not worth it. But if I was looking at 5 handles over here, okay, as soon as price broke on the US 500, right there, it broke that. You're looking at price going lower, going higher. I would still expect to come down to this break or go higher, but because of this structure over here, you'd see a break over here. You would use that as your order block, that whole section over there. Look within price to see what's happening over here. As it's broken, you have your volume imbalance. You could have taken a trade from your volume imbalance, put it underneath here, and gone from here 53 to 58. That would have been a 5-handle move. 58. That would have been like a 5-handle move, literally. Even more. Yeah, price is going higher. Exactly what I thought. I use Twitter. Yes, fire. DXY is going down, as I expected. Because there's all of this I mean, I explained it before. There's liquidity within liquidity over here. So, and we also have, was a perfect one right there. So that is ultimate sell side for this. It would have to take this, go lower, seek whatever it's seeking over here, which on the higher time frame would be this low down here, which means that I'm looking at price to at least go to here. And what will give me confidence for that is this move pull down that we have right now. If we have one standard deviation from the high to the low, that would be one standard deviation is here of that move. I'm on Twitter at only Gentsla. So Natology, why are you laughing, man? So at the only Gentsla, that's my handle. Yeah. Okay, now that we've taken liquidity, all right, that's why I said before, I'm not looking at any of these things as confluence because we are not within my time. Now I start looking. We've just taken buy side over here, all right? We might be seeking buy side up here, and now I have to see if there's a break in structure. And here we go. We just wait. Change of character? No, I don't use a Koch, bro. What I do is I look at price. I don't know if it's a change of character, if that's how you determine it, but I look at price and I see what's happening. So this for me, again, like I said before, this was taken. This was taken. What you could have done if you're hyper, like a super scalper, is you could have literally gone from this fair value gap and gone from here and literally just targeted a 1-to-1. That would have been perfect. But I'm not here to target 1-to-1s, I'm here to target 1-to-4s. So I'll wait. That's not my strategy. No, I have not taken the short yet. My whole strategy is, look where we are right now, 10.10. Price just took out the 9.30 buy side. What has price not done? It's not come anywhere near the 8.30 sell side. Even though there was this snap, okay, this whole price action over here, okay, if you look at that, there's a lot of buy side being set up. As soon as it snaps it, that is your ICT 2022 model, but it doesn't form within the time. So right now, it's taking the buy side. What I'm waiting for is I'm waiting for a red candle like this to get broken. Now, this red candle over here, that needs to get broken before I can trust that price is going to go short. It's a high risk long though if you're longing this because you never know. The market's going to be all over the place today. Because I'm looking at this, I'm seeing sell side. But I have to just wait. What do we have? We have a volume imbalance inside of here. 7184 to 7188. 4 to 7188. Volume balance right in there. Okay, so that's first. Right, this to me is considered a break. Considered a break one. Now I'm waiting for price to create the fractal. Once it creates the fractal, then we can see. We see what price does here, where it closes. "30 seconds on this candle." So far what we've done is we've created a fair value gap in here. See what happened? Took buy side. Now what are we looking at? You know. What's happening with GBP? Oh, you know. What's happening with US 500? It caught up into the weekly gap, and then what's happened? Oh, you know. I explained it all. Now we wait. This has been set. Beautiful. We have an imbalance between 157 and 153. 53, 15. It has to be coincidence, right? If it continues dropping to the floor without actually making a retracement in, I'll be quite sad. See what DXY has done. Quantum encroachments coming back up to here. Come on, let's go into the middle. And here we go. See, look at that fair value gap. Look at that reaction. See that? Beautiful. Absolutely stunning. Let's go. You're looking for shorts on breaks or lows? Not much. Not breaks or lows. I'm looking at shorts or breaks of structure. Fair value gap. Entry above the fair value gap, and we're going short. Yes. To here. To here. Ultimately, I'm looking at down here. because I just don't know what I'm talking about. You know, especially when your stop is already break even. And you've taken 2R off the table. It's okay. See, 2R is off the table, and I'm targeting 4R. That's my trade. Let's see if it goes there. We're right now within that little volume balance that I mentioned before, but I'm expecting price to drop because this is the macro. We're right now within the macro. If it doesn't, because of my entry here, I've taken 2R off and I'm already 1% up. And if it stops me there, fine. I've got no stress. Oh yeah, let me actually put some music on. Sorry about that, people. Sorry about that. Let's jam some of this. It's going to be loud in the beginning because I haven't put on. And in Forex, you have to literally put your stops. You have to be super aggressive with your stops because the market is violent. See, right in here, just to add more confidence to this whole idea, okay, we have this fair value gap over here. It has been broken, but we're still waiting. We have 8 seconds on this. If it closes up here, then we might be looking at it's going to go higher into here, but yeah. We see. Because ultimately, this whole shift in structure over here, that's now your bearish order block. Looking at this, that's your next structure, like support in a way, your resistance. I'm expecting it to continue going lower. Let me see. Let's watch. Wait. See what happens. Nico Doring, what time frame are you looking at for that? I'm looking at the macro right now. The macro is seeking liquidity. Now, because it's already sought the buy side over here, there's a change of structure in this little break candle right there. Break, this break, and then we're going low. Where's the next liquidity? The next obvious liquidity is over here. Okay, so that's obvious liquidity is down here. Ultimately, I would want it to go, my end point for this would be down here at a 24R. But I don't seek 24Rs, I just seek 4Rs. Okay. Now let's put this up here, back to my 4R. We're almost there. Just wait for it. And what's nice about this, what adds confidence to my short, is that if I look inside of this, this is a fair value gap in here. There's another fair value gap in here. You also have, like I said, your 830, which is down here. Okay, that's 4R done. That's my trade for the day. Finished. I guided you through that. And look how price is oh, it's beautiful. Absolutely beautiful. Let's be happy days, people. Okay, now, next time frame we're looking at. What is the next time frame when we are trading ICT? Well, we're looking, or let's just see what US 500's done. Same thing. 930 was set over here. That was the highest high within the 930 candle. and that was the lowest low before 8:30. No, where's 8:30? Over here's 8:30. So this was your buy side, okay, and this is your sell side. As you can see, we have taken buy side, done. What happens between 9:50 and 10:10? 9:10, shift. Let's go. Oof. You want to see the funny thing? Let's take that same trade and put it into gold. All right, 9:50 over here, 10:10 over here. What's happened? If you look at the macro structure, liquidity, it snapped, you come down, seek the nearest low. So your trade could have been from that break into here, coming up into your fair value gap with your shorts, with your highs over here, and you could have taken that low. That would have been my target, but you could ultimately go lower. And that stop there is perfect. Why? Because it's within the highest wick over here. Let me pull that up there. 50% is your consequent encroachment of that candle. Just eyeball that. Done. Okay, so that's trading done for today. Everyone, beautiful. Got our beautiful 4R finished. Happy days. Like I said, you can take it lower because my expectation for price is for it to come down to here. They will remove that big box so that it seems random. Okay. Yeah, breakers are amazing. I like breakers. Now, if it doesn't come down here, I'm looking at the 50%, which is just above here, is right there. And what we could get is we could get a little retracement coming up here and then seeking buy side. But then if that happens, between Asia and London, I'm looking for then price to go back down to hit those. That's it. Done. What high time frames do you use for the 1 minute, 15 minutes? I use the daily. I don't do this whole like 15-minute, 1 hour stuff. I literally have the daily. And so let me go into Euro. Go down here, my high time frame. And the daily. That's my high time frame. I want price to fill this in. Done. That's what I want. It's not there yet. Whatever happens after that or in between that, because it might actually leave this gap open and carry going higher for later on. So better FX S&D entry. What do you mean S&D entry? What's S&D? Oh, what happened here? From this little volume imbalance that I marked out in the charts? What happened? Oh, shocker. It's a shocker. It just doesn't happen every single day, does it? No, it doesn't. Instead of searching inside for what they gave him, a strong will, strong mind causes mayhem. We could change the world, change times, rearrange them. Staying on pace, running the race. Life is a chase, I don't want a place, I want to be first. Work till it hurts, dehydrated thirst till I'm in a hearse. High ambitions in the right mind can take you so far. It's like you lived a few lives. So yeah, I can scroll through. I can scroll through the time frames. So like looking at this structure, for example, I look at that, and yes, I can look at the 15 minutes just for like, okay, just to like remove some of like the price action, just to make it a little bit cleaner. And then I can go to the 1 hour if you need, but yeah, no, like your main price action will be found on the daily, and then it'll add confluence. How do you set TP target? Mind explain the current target. Okay, so I have kind of explained this in a way. So my trade's done. Okay, I enter with the trade manager. And my current target is 50% of the, as you can see, this big green box over here. That's a gap. It's either 50% of that or the bottom of it. If you don't see it today, you'll see it tomorrow during the London session. This is basically also created because of the weekly opening gap. As you can see, this big gap in price action over here. Now it's filled in this much of that price. Alright, so let me just make that a different color. Let me get orange. It's filled in that much of the price. There is a section of price down here that is completely unfilled. Completely unfilled. So this price action over here is where I would look, because that is a void. Okay, this is what's referred to as a liquidity void. Different to imbalances, different to anything else. Liquidity void. What is a liquidity void? It's a void, meaning there's no price action between the close of that candle and the open of that candle over here. Okay, there is from the close of here, so let's just zoom up there, to the open of this candle over here, there is zero price action. Now, these voids are a magnet. They love drawing price to it. Whether it's once, twice, 4 times, 10 times, they will draw price until price eventually fills it in. So yeah, that's basically it. As I was saying, I have a trade manager, which allows me to enter price very fast. And what it does is it sets my it aligns it with price, and I literally just need to push one button on my keyboard, and which is 1, and then I enter the trade. And I've already got my preset 2R stop loss and 4R. I'll actually show you. Here we go. Go into the section over here. Okay, and let me swap StreamYard to just my face. Now it's not going to show you the full thing because I've only got it on half. But basically, this is already here. Okay, I have my trade already set in motion where I want it to be. So if I have my stop over here, it's over here. If I have my stop just over here, it's over here. Now, as we're entering price over here, that was the fair value gap, and I was looking at just above the fair value gap. All right. As you can see, this hits there, and then I just hit one button and I enter the trade. Now, I've set this up so that there is 2R, 4R. It automatically exits the position. And yeah, it's quite simple, really. It's a nice little trade manager to use. So my stop loss is at a percent. It's a percent, and whatever the trade manager designs to use, because honestly, when you're entering trades on the 1 minute and it's super fast, you don't have time to be like, okay, I'm going to calculate this, because price is moving, it's fluctuating, and it might tap into it and then go. And as it taps in, you need to be ready. if you're entering manually, or unless if you've got a limit order. I don't trust limit orders as much. I'm more like a manual trader. So this trade manager that I have right now on here, let me just get up. It's called the Forex Trade Manager for MT4. That can be found in the market. So what's nice is that I've got a whole bunch of different. I have this. I have my Forex funds, and I have FTMO, and I use the same trade manager on all three. So yeah, you can find the trade manager if you just go into your broker and you go into market. You'll find it. Looking at price right now, this is not a void, this is a volume balance. I just like using void as the name. It's not a void, it's a volume balance, these ones. Big dog. NWOG. It's so because of the spread on the thing that I'm using, I had to find a way. And when ICT said between 5 and 6, I was like, you know what I'm gonna do? I'm gonna go back through 5 and 6 o'clock on everything. What happens here? Between 59 over here and 5 o'clock is here, but if you see 6 o'clock is slightly higher over here. Because there's a gap already there, I don't need to, I just place where the gap is. I don't need to place it higher at the open of 6, which would be here. That'd be a huge section of price. So then I go the day before, okay, the day before is right over here. Let's see what I've done. This was actually a little bit of a challenge. All right, we have 59, 5 o'clock. That's the closing price at 5 and the opening price at 6 o'clock. Here, opening. What happened? We go up, we go up, we go up, and then 7:30, 8:30, taps it, bang, into your next price. Easy. So I did a lot of backtesting on all of this, and you can have the same thing on GBP. You can have the same thing on like all your charts that are related to USD. Oh, I wonder where price is going to go. Okay. Now, normally, because my trade happened within, I've taken my constant 4R. Okay. If were a classic ICT model, you take it to the nearest like confluence, all right, and that would be that fair value gap. Like I said, you could have taken your trade here, you could have taken it to the middle, you could have taken it to the end because the one underneath that, or you could trade the whole leg down to here. Then that's your sell side taken, boom. But because I I have a problem sometimes when I have a greed complex where I'm like, oh, this trade's gonna go forever, and then I'm like, it happened once. I was actually up like 8-9%, and then the whole thing just swung around and hit my stop loss, and I was very sad. I was so sad. So what did I do? What did I learn from that lesson? One, I set my 2R and my 4R, okay, for the trade. Okay, because I don't necessarily trade like other people who trade a constant lot size. I trade with a dynamic lot size, which means that my lots could be, depending on the pip distance, my position could be, I don't know, 1 lot, or it could be 20 lots. So because of that circumstance, I never, ever, ever want to be trading with news. Because if you've got a very small stop loss and news hits, and then it's like, it actually happened to me on a demo account where I was trading, and I didn't actually realize that news was coming up, and then news hit, and I had a very, very small stop loss, and the news came, and the candle was like one of those big candles. You saw it. When was it? Let me just take all the stuff away so that's clean. Okay, you saw it on Friday. This. All right. What I did was, because of this price, it's very similar to this actually, because I was on the wrong side of it. So I had my stop loss. I had entered over here, I think in the middle, and I'd put my stop loss just above here, and I was targeting down here. Now what happened is, as soon as the candle shot up here, what it did was it filled me over here. Now that fill action over there actually meant that was my initial, okay? I call that 1R, all right? For that trade, I lost 5R, 5%. It was unfortunate. Yeah, so some people who do like standard lot sizes and stuff, it's a lot easier because you're managing a smaller position in a way. But yeah, that was my one bad experience. Where are we right now? What's DXY doing? Yeah, this is going to drop. Everything's going to go. It's going to run up now. As I've mentioned before, when I initiated in the beginning of the stream, I said be very, very careful today. You have to be nimble fingers, because price is going to be volatile because of the situation with the banks, and also people don't know what time it is. They all think that 9:30 was here at 10:30. Okay, that's what they think, because it was daylight savings time in America. So they'll be doing what I refer to as seeking liquidity multiple times. Excuse the cough. Got a bit of a nose as well. Oh, here we go. Now it's going into this nice little lovely price section over here. After it's taking up liquidity up here, it's gone down. Beautiful. And we look at what's happening on GBP. Highs are broken. Nice. Let me remove that because it's invalid. Your entry was here, going down. That buy side was taken. Now we're on a higher time frame objective right now, which is, go look at the 1 hour. That was the higher time frame that was just taken. that liquidity over there. Where would it be seeking next? In the middle over here. Ooh, look at that reaction from those highs. That is your classic support and what did you say? S and D, S and R? Support and resistance trading. There's a lot of people trading there right now from that point. It's gonna manipulate. And it's gonna take a lot of people out. So gold's breaking, lovely. US 500's breaking lower. Again, the price action that we discussed in the beginning over here was it needed to go into here, break lower, and we have a whole bunch of nice little shorty price action. We have sell side still down here. That's definitely sell side. Depending on what happens in price, we might have another entry. This was beautiful. See this little gap in here? That little volume imbalance? That was a beautiful short. We're taking 55 to 70, that's your stop. 5 to 50, 60. The 5 handle move, 1 to 1. Stunning. But again, because that's spread, there's no ways. With the broker that with this broker's got really good spread on got really good spread on forex, like absolutely beautiful. All you need to do is watch dollar. All the manipulation that happens elsewhere, dollar will show you. It will literally show you what's going on. You see, for me, because of my strategy, I actually only take 3R total in the trade. And I'm okay with that. You know, my win rate is above 50%, and I'd have a 3R. I still make money at the end of the day. You know what I mean? And what is this whole thing about? This whole thing is about making money. So why it's 3R is because I have 50% that's taken off at 2R, and that gives me 1%. That means I'm basically ahead a percent, okay? And if it goes to 4R, then I gain another 2%. So total 3%. It's interesting for dollar. When I see a wick like this, it's showing me, but I'm waiting for this whole price action to be filled. Go look at the most recent, which is one over here. Let's see. Is that perfectly at 50%, just underneath here? Yes, it is. That would be 50% if it carries on going down. And then this would be the full move. That whole price action leg from here to here, that would be the full range it would go to. Supply and demand, yes. S and D, S and R, supply and resistance. No? The support and resistance and supply and demand. I don't know. I've I've spent too much time with ICT. I don't even use that a lot. That kind of terminology. What time is it now? About hit 11. So we have our next macro going to kick in. 10:50. Yeah. To 11:10. And then that's when it would set up, and you'd take the trade time wise through to just before lunch, this amount of time, or you'd go to 12. So within that time frame. Thing is, we had taken liquidity on the sell side. What's the next macro? I wonder. Unless there's a high time frame objective that hasn't been taken yet. Which for Euro is the case. We've taken the 9:30 objective. Strange how price is reacting exactly in the time frames that I would want it to react. I'm not saying that I know what's going on. I'm just saying that a high probability. If we're looking at this leg right now, not just that leg, but this leg, what does this leg show you? This leg shows you that there is liquidity on the side up here, and that there's liquidity down here. And as we've taken that buy side, we've taken our next buy side, buy side, buy side, buy side. You have to wait for our next section. But now when it comes to Forex, what tends to happen during this time, if it hasn't made a humongous move to go down to where you would want it to go, it generally does like a little static price action thing, and then it just kind of like hovers around the same area for like the rest of the day. And then Asia kicks in, and London kicks in, and then we go back down to here. Yeah, so let me actually just remove those. What's up, WST? WSTFX. Nice. Is it bullish? Are you sure about that? Are you sure? You're sure, my friend? I've done my trade for today. GU is a 4-hour on a 4-hour order block, on a bullish 4-hour order block, because seeking higher prices already with this move, unless it wants to do a massive monster, I'm expecting short. Because everyone's expecting long, aren't they? Literally everyone. So right now, Euro, again, with my strategy, we have, you can see, let me just remove this candle. Okay. We have this candle here, which would be break one, and this candle here, that would be market structure shift. So if it didn't break this and came below here, then I would be looking to the short. That didn't happen. Because there's higher time frame objectives still. And this is not exactly equally high. But that's where I'd see it going. From here or here. That's where I see it coming from. Is there a pip range that you like to keep your stop loss between? I don't necessarily look at pips, as in like, that's why I have the trade manager. Because when you're moving really, really fast, like you're literally in the trade, like today, like how long was that trade? 1, 2, 3, 4, 5, 6, 7, 8 minutes. I was in trade 8 minutes. And it snapped in. And as soon as it came up, I was like, I pressed my button and I went short and I was already in. But the price range over here, so you can't see that chart. the price range over here, I don't look at the pips, I look at the market. So what the market is telling me is that there's a volume balance and an FEG. If it wants to go above this, like where my stop is here, then I know that it's highly likely it's going to go higher. So as it broke down and it continued breaking down, I was already out, and that's fine. But as you could see, it came above that section, and from there, because it didn't respect all of this bearish order flow, it continued going higher. This is an interesting price. What's happening right now is interesting. Just really quick. Respect to the fair value gap, it's only broken one form. We have 1, 2, break that low. What we might actually be looking at right now is if price continues going lower, we're looking at a breaker pattern forming to go short.
So he's been looking for somebody who could save him instead of searching inside for what they gave him. A strong will, strong mind causes mayhem. We could change the world, change times, rearrange them. Staying on pace, running the race. Life is a chase, I don't want a place, I want to be first. Work till it hurts, dehydrated thirst till I'm in a hearse. High ambitions in the right mind can take you.
So again, it depends on structure. All right. So when I look at this over here, as it pumped up here, it's seeking liquidity and then shooting down. That to me is an indication that it wants to go lower. But I have to wait for price to show me that it wants to go lower. So what I mean by a breaker pattern is you have this section over here. Okay, we have a low, a high. If it breaks this low, you can draw the last red candle light in price, which is here, and that would be your breaker. But we're not there yet because we have to wait for price to break here, and then as soon as that happens, it either comes up to the breaker or it comes up to this section over here. We'll see. Yes, I'm going to be reading until 12 o'clock. which is in an hour. So again, where are we in time and where are we in price? Right now, time and price, we are between 10.50 and 11.10. Okay, what's that the beginning of? That's the beginning of ICT. Let's all say it together. Put it onto a big 24. Lunch macro. Lunch macro. Alright, is this time? Right here. Yeah, no worries. Crypto PRSTFN. No stress at all. So Rob James, sorry, I was actually explaining to you. What I mean by price is that, and pips, is that if I'm trading on the 1 minute, your fair value gap is like this. Yes, your fair value gap can be humongous. Okay, like this is huge. Okay, but again, if price were to come below that huge fair value gap, that's what, from 5922 to 6061, that's almost like 9 pips of a fair value gap. Okay, that could be considered huge for some people. It could be considered small for some people. If you scale that out and you look at the 1 hour, your fair value gaps and stuff will be on a different pip range. So for example, this is a massive pip range right here. Okay, how many pips is that? $43.9. That's like almost 50 pip range, right? In that section over there. So it all depends on which time frame or scale you're looking at. You understand what I'm saying? So if I'm looking at this again, I can look on the daily, and I can look at, let me just put up my high time frame. Look at the daily, and I can look at this fair value gap that I've drawn in over here. Okay. Down here, how many pips is that range? 85.9 pips. Oh, it's more than that. It's 800. Oh, it's 85. Yeah. 5, 4, 3, 2. No, it's more than that. This is like 850 pips for this fair value gap. That's huge. That's absolutely massive. So, Noah, have you heard about what news it is yet? Because I've been waiting for them to have their meeting. Whatever price is, I'm still expecting the sell side to come down, whether it's today or if it's tomorrow during New York. I'm not New York. During Asia/London, depending on what news comes out then. But they've just had their meeting, haven't they? Check. They've had this emergency pop-up meeting. No, not yet. The emergency pop-up meeting is at 11. They've put it back in time. They're waiting. They're waiting. They're about to unload. I'm telling you right now that ultimately I'm short. Because there's a lot of liquidity racing down here. Alright, so we've just had liquidity on the buy side taken. Beautiful move. Let's go to the 1 minute. Oh, hi. See. Oh no, it's not going to be good news, man. It's going to be really, really bad news. Well, it'll be interlaced news, I think. It's going to be like mishmash. Right now, everyone doesn't know what's going on. Right? They literally don't know what's going on because they don't know how to respond. There's never been a time in the last 14 years that a bank has crashed, that there's been a run on the bank. You know what I mean? Getting ready for it. Clicker's gone lower, higher, lower. That breaker is not valid. What you're looking at right now is this fair value gap in here. If price were to go higher, that should be respected. All of this back, delete all of that, don't need any more. Go volume imbalances in Euro USD. Price is that 7288 to 7284. 8. Then we have a gap higher. IFVG supporting the fair value gap behind it. How are we doing on this? Yep, it's taken out the highs. Nice. And it's taken out the buy side on US 100. So we could be seeking the sell side on US 100 now. Let's just look at where price is. It's there, it's got a 5 minutes. A little bit too perfect. Doesn't respect this halfway gap. A whole bunch of unseen price over here. Higher, lower, higher. Last section over here. Lower, higher, lower. Last candle there. Tick higher. 5 minutes. I'm not expecting higher prices. Gappy gaps. I call it gappy gaps. These gappy gaps. Right there, nice little lovely gappy gaps. I have to look at those. But we're coming up to a time 30 and 20 minutes where this news is going to be released. That was also respected. Section over here now. Being a fair value gap on the 1 minute. Yeah. Price shows me that it wants to break this. That then becomes my break 1. little volume imbalance up here. Tires are too equal, and it hasn't reached this little section that I've drawn out right over here. You see, just how fast is responding. This actually looks like an IOEFD or IOFED. Those of you who don't know what that is, it's an institutional order flow entry draw. Alright, means the price got bang, that little fair value gap, they're going to tap, they're going to tap, they're going to tap, they're going to tap. That's the institution getting in here. They're getting in, and then they're expecting price to drop. Yeah, thanks. Institutional order flow entry draw. But because it's set equal highs, what it does is it creates that for later on for them to swing it back up, take their re-entry, and then continue going lower. That right there. It's actually beautiful. You know what?
You could try to play, but you're never gonna beat me. Look the other way, what I'm doing ain't easy. Bloody hands stained from the people who deceive me. Muddy hands break through the chains, go. Pushing the train, pick up the range. I'll be the best above all the rest, put me to the test. Expect nothing less, your check as I'm chess, what's happening next? He got the venom, a tangible weapon, no coming in second. This life is a lesson, he got a new engine from pain, it's a blessing. You focus, no guessing, just hold an obsession. All in his possession, you got the attention. I'll leave an impression and take your redemption. Just kill no discretion, your mind is a weapon. 11-11, it's time for progression. You try to play, but you're never gonna beat me. The other way, what I'm doing ain't easy. Bloody hands stained from the people who deceive me. Muddy hands break through the chains, go free me. People like so
28 pips, 16 pips.
a strong will, strong mind causes mayhem. We could change the world, change times, rearrange them. Staying on pace, running the race. Life is a chase, I don't want a place. I wanna be first, work till it hurts. Dehydrated thirst till I'm in a hearse. High ambitions and the right mind can take you so far. It's like
Yeah, man. No worries. No worries at all. I am expecting price to break from here. Target sell side. We'll see what's happening over here. So we've taken a 1, it's broken. 2, it's equal highs now that we've set. Let's see if this fair value gap gets held. It's building liquidity right now. Because it's taken this liquidity already, it might seek these highs to go a little bit higher. Or it could just completely respect that fair value gap and then continue to drop. Building efficiency over here. What it wants to do. Why this fair value gap to me is important as well. It's not just because of that volume imbalance over there. We put up a broker, Right. Good price. No. F. 7239 and 7238. There is a literal micro pipette. Okay. On down blue. Over here. Down blue. 7235. There's a micro pipette just in here. That's a fair value gap. I mean a volume imbalance. Okay. Volume imbalance. Now that gives me confidence that this fair value gap, where might it come to? It might fill it in, might take the volume imbalance, and we'll be seeking sell side. Yes. And I'm expecting it to drop from here, and it should do that with force. With a lot of force. And for those of you who are confused about what's happening, okay, let me actually just change this. Okay. Change that to my face. And I'm going to this. You can see how much I'm making right now. Alright, and I'm about to bring my stop down to here because that was institutional order flow entry drill over there. I want price to continue dropping. Now for this trade, I'm literally looking for a 2.5. It's down here. And I pass the challenge. If not, it's okay. I'm not stressed. Alright, so let me actually just bring up the older chart. Okay, let's see what's happening on DXY. DXY is taken buy side. A little void in price over here. It's interesting because we could see price go higher. The screen's too small. Sorry about that. Let me actually adjust that. My thing here quick. Yep. It break even. If I wanted to hold that price, I want to continue dropping with a lot of force. That right there. And what's that? Is this easier to see now? You can see my TP1 and my TP2. Alright, I can initiate my trade if I put it here. I can change this. I have my risk to reward profiles ready. And what I literally do in situations like this is I have this up and running already. It's in place in case. Okay, this to me on DXY, and because GBP is, no, that's the 1 hour. Let me put up the 1 minute. I'm not looking at this. Within that, it's just taking this buy side. It's within this fair value gap over here. It's coming up here. DXY, I'm still seeking that point or even lower. But I think what's happening is we are looking at a crazy lunchtime today. So this is relatively square, this price right here. Let me make that a different color. Let me make it, I don't know, purple. Alright, it's relatively square. It we have a lower, a higher, and now price is breaking down. Now what could actually happen here is we might be looking at a snap and then seek higher prices. But again, right now, trading wise, looking at the time, it's nearing the end of any time that I would actually look into getting into trades. Nearing the end. Doesn't mean we're there yet. Just taking this buy side on US 500. NASDAQ, US 500. I'd be looking at some kind of a short on the near term, at least to take out all of this over here, all of this liquidity, and probably seeking lower prices. And because of that price action, that's above. Yeah, the short's valid actually. GBP doesn't look like the short's valid. Oh, you can't see that, sorry. We go on to price over here, and I'll show you my face instead of my broker. Yeah, do you see what happened there? I was in the trade, and as soon as I started moving away, my stops were in place because I expected the trade to respect what I wanted. West FX, my man, you know what's going on. I expected the trade to respect my price plummeting. Didn't plummet, I'm out. Break even, it's fine. You move on. But my analysis on the had a snipe, equal highs, we have displacement. Is it enough displacement though on US 100? Volume imbalance inside of here. Draw through of the fair value gap over here. We have last bearish candle. Super microstructure, that's a breaker. With a fair value gap in it. But I wouldn't take that yet, because looking at what's happening right here on DXY, this choppy price action right here, don't take trades inside of chop unless you trade the chop. Okay, unless your whole narrative is trading the chop. Why do I say that? Very simple premise. Because price, they might decide that they're going to snipe it one way and then take it down lower on DXY. Or they might decide to snipe price down and take it higher. So this is the perfect time for traders who have built up their liquidity, their long positions and their shorts on both sides to get taken. So Isaac, I don't trade on YouTube every day. I trade on Trading Nuts for me it's a Tuesday morning and a Thursday morning, which is Monday and Wednesday, New York time. Yes, it's an indication of a big move coming. I agree. But it might not be the move that everyone expects. That's the thing. If we're looking at price right here, we've had this massive range coming down. Okay, it's come down, it's built up, it's come down, price building, and most likely it's going to come down. But the way I trade is I trade the moves after that. So for example, here you have all of this going on in here in price. Price has come down, it then does its thing, it comes down, and then it comes down again, and then starts chopping and it snipes, and then it has a market structure shift, and then it changes to go bullish. That's my trade. I literally reversed what everyone else is doing. Everyone else right now is going long on GBP, on Euro USD, they're all going long. But I'm not looking for the longs, I'm looking for the shorts. But it has to be within my time frame. Now I've already taken a trade. I took a second trade, which was a break even, unfortunately. What feature on TradingView do you use for your labeling of chart elements? Like, I use a rectangle, I use a trend line, and those are like the only two, and text. And I label it myself. So for example, if I put my rectangle over here, I can push this little button here, templates. Alright, I click on templates and I've saved a whole bunch of things that I can utilize. And then if I have my line, same thing. Templates, I have a whole bunch of stuff. The list is, I've actually made it myself. So I've got like a bearish order block, I've got a break one, bullish order block, buy side liquidity, consequent encroachment, which is just CE. So you can see there, CE. I changed that. It's div, meaning divergence, market structure shift. I have, not saying right now that that's what's happening, I'm just showing you what's happening. I have daily high, I have daily lows, same thing, just with low. I then have like a partial inside there. I have a 50% marker. I don't use them all the time. Sell side liquidity, obviously buy side liquidity, also mean threshold, MT. And then 5 handles, but that's for this way. What I do is I go onto US 100, for example, but I decide to use a box now instead. So from here, I go from this, which is 3892 to 3897 on the dot. Alright, that is, I would label that as 5 handles. Or I can use a box to do exactly the same thing. 5 handle box. That's literally what 5 handles is. So if you entered over here on this fair value gap, alright, you enter the low of that fair value gap over there, and you have your control C down here. As price starts coming back up, why I put this is because he also says 5 handles on the sell side is your stop loss. So 5 handle stops and a 5 handle gain, and so that's your 5 handles done. If you were to trade 5 handles again, it's very, very small. 1.1 and 4.1. Oh, this is interesting. Okay. so now this was invalid, but that was valid. All of this price action. Expecting fair value gap. That little volume imbalance that's just behind inside there that you can't see on your brokers. No, so on indices, it's very, very simple. One handle is $1. That's how I look at it. So a $1 movement, so say from 883 to 884, that's $1 movement. That's one handle. Duplicate that. Yep. See the snap out right here? It snapped lower. Right there. And then now we have imbalances. Now I'm hunting. Oh, this is nice. This is nice. We have this snap to go. And that's how fast that was. It was literally 3 minutes. Inside of that fair value gap, so we're going to GBP, we'll come up, we snap the liquidity up outside of it, outside of that. Gold just got sniped as well. That's going to hit lower. See. Liquidity taken. And we split the dollar. Oh, price is respecting. Ooh! This is nice. This is beautiful. Now I'm looking for indications that it wants to continue lower. Probably will. Highly likely. Something else that I use. It's called an SMA. The squared moving average. It's funny. Literally just price reflected in a line. Here we go. So you see what I said about this? So with this build up over here, it took tail side. Now it's aiming for buy side. Funny. I hope you weren't going long, brother. I've been telling you I've been short all day. What time was that? That was at 34. Yeah, it's gonna carry on rolling short now until my target, which is down here. Watch. Amazing. I love ICT. It's so fascinating. Lower, higher, lower. What's behind it in price? We have a volume imbalance in here. That would be breaker. See what I said about it filling up this whole little nest over here and then shooting up long? Was I wrong? Was I wrong? I love it when everyone's like, oh no, ICT doesn't work. I think it works. I mean, look at that. It's beautiful. Remember, I'm looking for this sell side right over here, and even lower over here. Where I expect it to go. Especially after setting up equals, it's not lower, higher, it's gone lower. It's gonna have some kind of reaction over here, and I'm expecting it to go lower. So I'm short. But again, today's chop day because the news is funny. He just released the news, didn't he? Dollar weakens as yield differential shift. Dollar slides as Fed rate hike expectation slump on SVB collapse. No, they're still gonna hike rates, even though they're gonna print money. The rates are gonna be higher then. Means dollar up, for these highs up here. Like, that is perfect ICT. Our time frame quickly. 5 minutes. Snap. Let's just change the music quickly. I'm not in the short right now. Because this is not the time that I trade. But they had unexpected news today, such as the Fed unexpected meeting. And then they changed it to make it half an hour later. That's why price is reacting the way it's reacting right now. Right now, actually. If you look at the time, it's the news release exactly on the dot. So, the news release was at 11:30. Okay, literally. Go look at that. 29:30. When the Fed started talking. What happened? Bang. Oops. Funny. Very, very funny. So now, you just wait. We check. The massive fair value gap here. See if it wants to hold. Like it's doing its IFD stuff again. I think the 1 minute is too much noise, so you can always just use the 2 minute. That's just continuing to drop. Price on it's taken. So the ICT concepts are very, very simple. All you're doing is looking for buy side to be taken, and then where's it seeking next? Sell side of some kind. And you can see it in everything. So on a big chart, big moves like this, okay, we have this is buy side, it's taken. What's it seeking for? Sell side. It finishes its move down here. Now, because it's finished taking sell side, it needs to then take buy side. So it starts taking sell side, then goes to buy side. Then we have a set over here, which breaks, it goes down, it goes up, it breaks that, and it seeks sell side to go higher. Same thing with this. Just come to fill this in perfectly, and it's dropping. Now, all of you that were watching the stream, you saw me place this here before. You can go back and rewatch it if you want. That is the place that price reacted from. There were two places. There, or ultimate buy side over here. Which is actually what I wanted it to go higher and then go down, but no, it's okay. Not within my time zone. My time zone was over here. And I already took my trade. And It was a nice little trade over here, above there, and I took it to 4R, which is just over here. That was my trade. Done. But this is actually quite a big move. Took a DXY. Price reacting nicely. Nicely. From that little purple box that I drew. A little bit of a snap to seek sell side, and then we're taking buy side. Funny. And this is possibly going to be the move that will continue on now. My trade is the one just after 1010. That's the one I'm really, really comfortable with taking. I can trade based off of just looking at market structure, but I find that it's not as high probability, and that I can get stopped out. So I like taking trades that are consistent and happen every single day. When did I start trading? That's a good question. It's a very good question. Basically, COVID came around, and just like the normal story with everyone, COVID happened, and then things started changing. It was about the end of 2020 that I started getting into, like, just originally just looking at the market, interested in it. I wasn't actually trading back then. I started getting into trading in about October of 2020, and I was watching lots and lots of videos, and I was trying to see what was going on, and I actually came across smart money concepts. It wasn't ICT at that time, it was SMC. And after that, I went and just backtested, and then I found ICT, and I was just like, oh my god, this is what I want in my life. So then I was trading. And then I was just literally, everything in my life was consumed with ICT. I've literally watched almost every single one of his old stuff. Not just watched it once, but rewatched it and rewatched it, because I had to understand the concept. Because his concepts are tools. You use the tools in certain ways, and then you're able to develop your own model, not relying on someone else's model. It's based off what you see in the chart, based on your observation, and everything's on you. If you stuff up, and I've stuffed up a lot, it's your mistake. You take it, and if you win, it's your win, and you take that too. So Sol Trader, he doesn't necessarily say, he says don't take trades if you don't know what you're doing. Right? It's high risk on a Monday. Alright? What he looks for is that one perfect trade in a week. So, right? Yo, what is ICT? ICT, it stands for the Inner Circle Trader. You can find him on YouTube. It's for free. And right now he's also on Twitter, and everything he's doing right now is 100% free. He's taking a 2023 mentorship actually. And you don't have to pay. It's not selling anything. That's also one of the things why I won't sell my services ever, is because I was given this I look at it and I'm like, yeah, I was given this as a gift, and I have to use my gift to help people. A lot of people don't necessarily see price the same way, and that's okay. Do you see what I said about this block over here, this time frame? After that little time frame, you're looking at the trade in here for your lunch macro to seek sell side, and then start seeking buy side, so a buy side. Funny how accurate it is. So yes, my whole, and I'll show you just quickly. StreamYard. Let's change this to my face. There's my face. Hello face. And we'll pull up this. Oh, you can't see it. See it there? No, you can't see it. All right. Do you see how prices reacted to that tiny little, yeah, this tiny little imbalance in price right there? Right, we have this one and we have this one. Price came down and it's come up and it's responded beautifully to this. Now that's not just coincidence. These things happen in price all the time. You can go look at this price over here, zoom in. Here, and you can see it in price everywhere. Right over here, right over here. You can draw it. You can draw these things through price. So you have this right there, this right here. Oh my god, it's been respected. Which fair value gap do you use? That fair value gap right in there looks tasty. Alright, especially if you're coming in to look for some more sell side. Looking for buy side. This huge price over here. I don't know, does this actually do dollar? Let me see. Symbol. I don't know if this does dollar. Let me check. I think they do dollar. Not here. That's unfortunate. Don't do dollar. But if you are able to see what our price reacts to this level right now, live. Broke this, came up, tapped it, and bang. I mean, now everyone who was here and they're like, oh, it's gonna go short, they've reduced their stops from here and they pulled it down. And they're like, oh, we're gonna snap that quickly because we can. Snap your little liquidity over here, and then we're gonna move down with force, all the way down. We need to shoot now. If it doesn't shoot down, then you're out the trade. But again, I mean, look at that spread. I know. There's no ways. There's no ways. I want to enter that. That spread's massive. It's this one again. There we go. So Rob, thanks for asking. I don't actually trade. I don't actually stream when I'm not streaming on Trading Nut. I'm doing this literally because I'm doing the Fidelcrest challenge. And so yeah, I literally am just trading while I'm doing it. I'm streaming while I'm doing the trading for the challenge. Thank you for asking. Win loss duration, hold time, average drawdown, etc, etc, etc. Okay, fairly simple. I have a set TP of 4R. I take partials off at 2R. Okay, so I take 50% at 2R and I take another 50% off at 4R, which means that I don't take 4R as the full trade, I take 3R. My win ratio is above 50. It can drop into the 40s, but it can also be in the 70s. So overall, I will like lose 2 trades and win a trade, and I'll be taking that partial. Average drawdown. It depends on the conditions of the markets and if I've been reckless. I've been reckless a lot in my life. So when I started trading, like my drawdown was insane, but now I've reduced my drawdown back down to I don't have much drawdown anymore. I might get like 1%, 2, or maybe even 3% drawdown, but I'll pull myself out of it. The trade manager is not free, Larry. It's you can rent it for $30 for 3 months. There are a couple that are for free actually. Where are we right now with Euro? Come down. Up. Now if you're classic ICT, you pull from the high to the low of that move, right? Which is here. And you're expecting price to react from either this point or this point in between there. And that is what he would consider to be that would be a classic what's called OTE or optimal trade entry. And how he would use that is that he would enter on the 62%, have the highs over here, and he would target first standard deviation, which is 1. So it would be 1.64. But what you'd be aiming for is the 150, the 200, the 250, hopefully down the road, according to my calculations here, 300, 400, we'll see. But again, the time that we're at right now is not an optimal time to trade. So personally, like that is what can logically happen, but because of the news that have just come out, we're looking at everything. DJ dollar weakens as yield differential shift. More. Give me some more news. You know what? I'll take that trader. Because I'm not expecting price go higher. We'll just see what's happening with dollar. Dollar's coming down. Euro come into perfect inefficiency. So I'm putting the money where my mouth is on this OTE entry setup. At this 50 points over here, this high, a little bit higher than that. I'm targeting this low down here. Yeah, outer circle. I like what you're saying there, bro. Managing risk is the only way. So my risk that I manage and how I do it, okay, is a very fairly simple process. If I take 1% and I lose the trade, I will cut my risk down in half. So my next trade, I can only take 0.5%. If I lose again, I have to take it down, and then my next trade is what? 0.25%. Really easy. How's the trade looking? Ah, yeah, it's looking good. I'm here looking at the comments. I'm not even looking at the trade. Because like I said, I've got auto. It's auto take profit and stuff. Because I don't need to stress about it. Now, I'll look to bring everything down to break even. Because I wouldn't want it to go higher than that. I would not want it to, for the OTE, I would not want it to go higher than this price right over here. Right, so that was my entry. I've now reduced my stops down to just over here. Stops over here. I wouldn't want it to come there. I actually wouldn't want it to come back to 50% of this. It's actually break even. Lovely. Nice to support this. Depending on how this closes, you have a little fair value gap right over here. Going down. Okay. Lunch is seeking something. It set up all of this liquidity right over here. And with OTE, hitting it, going down, and that's what I'm expecting. Not even within a kill zone. Yep. So that hit my spread over here, hit my stop loss, and again, I'm out, break even. Woe is me. That's a beautiful level. Let's see what happens after. It comes up here, breaks this. We'll be looking again. How long have I been studying ICT? I've been studying it for about 2.5 years. XY has set a whole bunch of nice. Oh, it's so tasty. We're going into lunchtime now, as in actual lunch. So at the end of this box, as I said, 12 o'clock until 1 o'clock is going to be actual lunch. So they're going to go take lunch. And we'll see what they want to do. We actually see what's happening right now. We have divergence between GBP. So I'm just going to the 1 minute quickly. We have the 1 minute over here coming down. Our euro looks like it's going up. What does that mean to me? Especially with the dollar breaking down. Shows me that GBP has a willingness not to want to break higher. If it starts to break higher, then it'll be continuation. Gold is just hovering in that area. US 500 has just come into this balance over here. It looks like a real turtle soup. Seeking highs. Viper, I would suggest, starting. ICT is very, very hard to comprehend because there's so many moving parts that can play within it. As long as you understand the basics and you understand it fully, not going on Twitter and seeing other people and backtesting and being like, oh, I can just look at this and here we go. I look at price and it's very, very easy for me to be like, oh, okay, cool. I can see that this is doing this. And then I scroll and then, okay, now I see it's going down. So obviously I would have taken a trade over here. No, that's not how it works. You have to actually go into replay mode and you have to test your model out, like whichever model you have in the time frame that you have it. And yeah, it's quite difficult to do. I have these highs over here. That's a definite draw later on. right there. Buy side on dollar. We've taken this first initial set. We're looking at GBP is pushing, Euro USD is pumping, but it's not pushing like that is. I'm actually looking now to see how far it could want to expand. 48, 70. 80. Weekly gaps. Dogs. Up here. Yeah, buy sides here, end dogs here. DXYs is still filling in this price range over here. GBP is not wanting to go higher. Excuse the cough, I'm sorry again. And like I said, if we don't see price reaching back down today, be active in London tomorrow. Like from the beginning of London. This forward. What? Avoid. That's definite bearish action right there. That's definite bearish action. They might actually be rooking today. Sorry, this is the ICT 2022 model. All right, you have your relative equal highs over here. It's taken out, and we could be. Let's look at that on the 5 minutes. 15 minutes. Equal highs. Candle takes it out. At least down to the 50. What price is that? 7239. This is right here. No, those highs are 369. Haven't taken that yet. Even though 1 minute, this is responding quite nicely to this fair value gap over here. See what happens at the top of that range. If it seeks to go higher than that and close. Come up into the, oh, seriously though, this is looking like chop. Tiny little volume imbalance, just in 36. Volume imbalance, avoid. Looks like price is respecting that quite well. Well, we'll see. It's come down. take this candle, if it breaks the low of this candle, again, if you're in a trade, you are expecting it to break low. You want it to go low with force. And if you're expecting it to go up, you're expecting it to tap into here and go up with force, which it has already. The way that it reacted from that little volume imbalance, oof, that to me shows me a lot. I have this price right over here, that little one over here. If it's gone high, it's gone into the fair value gap. Highs had been taken, but look left, all of this buy side. But GBP is still refusing to go higher, while Euro now has actually gone higher. That's the 1 minute. 5 minutes, still going down. 5 minutes. 5 minutes. Yeah. Going higher, yeah. GBP, 5 minutes. Same time. Going lower. Let me see. I'm expecting price to actually go higher on DXY. See. I have this nice tap into this end dog over here. Set on Thursday. Just tapped into that. See what happens. Breaker that's just above it. All of this price if it wants to go higher. That was a nice snap. Oh, that's beautiful. That's beautiful. And super chop day. Like, look at this price action. It's dirty. Dirty. What I want to do. I should go look. Come on. Open. Ah, please. 3. Okay, 104.001. Um, 104.001. Right here. That's where I expect dollars to go to. Right there. Now looking at percent range, this section, and this section over here. Much? Maybe that much. Take it under here. That's where dollar's gonna go. Spotting divergence live at the chart, baby. They're gonna work through lunch. As I was saying, they're gonna work through lunch. Where's my drink? That right there, that price action, that would be considered a if you're trading GBP. I've marked that fair value gap beforehand, but that would be considered displacement because it's been price displacement. Fair value gap short. Euro. So just chop. Okay, now I'm actually just going to remove all this other crap that's on my chart, so it's not in the way. And there, that's where I expect price to go. Once for halfway. Oh. And what is halfway? I need those lows. Further. That's the other week. Yeah, Alex, it's gonna have to go down there. Okay, what's happening in price? Yeah. Again, let me just close all of this off. Okay, if we just look at price clean, what are we looking at? If you're a trend line trader, you've just seen all of this get broken. If you're a trend line trader, all right. If you're, I'm not a trend line trader, but where would you look? Seeing as it's taken out this, it's come up to here. It has taken out this buy side right there. Okay, by like a little bit. Look at that. That right there been taken, and now after we seek buy side, what do we seek next? Some form of sell side. Looks like it's setting up for a leg, sell, leg, sell, and another leg or some kind into some kind of consolidation or reversal into what would do a market maker. It's going into a market maker buy a sell program. So this is the sell side. Okay, right now we just had the buy side. It's had leg, consolidation, leg, consolidation, leg, consolidation, leg, and initially on a small time frame, this is coming down coming down. We're gonna have some kind of consolidation, breaking lower. That's what I want to see. Into underneath here to go lower with force. Okay, with force underneath here, it needs to go lower. And from there, it needs to consolidate or retrace a little bit and go even lower. Set this, that behind there, highs over here. So I would see it initially. I'd want to see price. See all of this? Although this has been, it is a little snap. This is this 3 bar thing over here. This has been like almost equal price action, and it gets sniped over here and goes higher. What's it aiming for? Buy side. Right? Buy side's been taken. After buy side gets taken, we're waiting for it to form some kind of something. Okay, right in there. That's your fair value gap. So look at US 500. Oh, it's dirty. It's so dirty. Look at this price. Again, I'm expecting it to come lower. This is like turtle soup dirt. It's going down. That resistance, perfect. Going higher. We have these equal highs that have been sniped, but these equal highs have been formed on the 5 minutes as well. If it's going to go buy side, it's going to take that. Or it's going to go from this fair value gap right in here and seek the sell side. So we're looking at the price that could either come up to here and come down, or we're looking at respecting this fair value gap right here and then coming down. Especially with GBP showing me that it has an unwillingness to go higher. There's also on the 1 minute chart on your broker, you'll see that there's 7342 and 7340. There's a tiny little volume imbalance right in there. I'll just make it gray so you can see it. Behind that, there's another one. Was respected of 37 to 33. Seven to 33. Gork, if you're looking at GBP, right? If you were trading the way that I trade, right? Now, displacement is one single leg with big candles. These are small leg. Sorry, let me just. If you're looking at this scale, okay, look at the size of this candle over here. And we go down to the next candle, smaller than that one, smaller than that one. That one's about the same size, same size, same size. Same size, same size, same size. Let's go over here. Same size, Same size. What's that one? It's slightly bigger, isn't it? It's the same size. That one is slightly bigger than the previous ones. To me, that's displacement. Means that there's lots of vuma behind the candles. And DXY as well, if you can see, there's been lots of downside and there's been chop. What happened here? You had big candles, and small, big, and then big. So this is going to be a retracement down into here, again, possibly even into that volume balance has already been broken. There. So you see here, if you take this leg in of itself, okay, it's gone lower, it's gone higher. This is your breaker candle for it to go higher. Doesn't respect that, then that's a loss. But how I see it is right now, there's a lot of wicks. You've already got your power of 3, so it's a higher low, lower low, higher low. That is and it's been broken. That candle's been broken, so it's going to go higher. So this is another concept, the power of 3. Big video, ICT. Just go and study it. It's amazing. Euro responds to what dollar does in a slightly different way. You see what dollar's done? Is dollar's created a clean fractal right there, okay, and it's broken higher. Euro has created a whole bunch of chop, but if you look at GBP, it's created that clean fractal going down. Clear break. It's a game. It's contracting. Is there more news coming out today? I want this to go down to here. There's news tomorrow. Inflation rate, CPI. So we could get a tap in, or we could get 50%. It will then take the highs and then aim the low, or take the lows and go high. Tomorrow. Not today, but tomorrow. Today, because it's lunchtime, 12 right now. It's 12 o'clock and we're heading into 1 o'clock lunch hour. Okay. Where is the most liquidity that I see? I see these highs. That's been taken already over here. So what's next? Down. No worries at all, Gork. No worries at all. I love the questions. I enjoy it because I love price. I love looking at it. I love contemplating it. I love challenging it. Because everyone's so used to, oh, let's just chuck on an indicator and then if it touches, you place your stop over here. Well, all those people that have placed it. So let me do this quickly. What are you going to look at? EMA. Moving average exponential. Okay, great. Have I added that in? Okay. Yeah, now I'm going to set my EMA to, I don't know, 20, 21. Right. Here's a good trade idea. As you go up, as it hits the 21 and it breaks one candle above, you can take a long position and put it underneath there and then take a 1-to-1. Great. Then you're going to go same thing, one candle above, put it underneath here, and trade your 1-to-1. What does the algorithm like to do? You've placed your stops at that swing low. You placed your stop underneath there. You've placed your stop underneath here because you don't expect price to come down to those levels. And then what it does is it goes right to where your stop is most often. Okay, most often it'll go right to where your stop is, and then go back up. Or to go right to where your stop is, and then go back up. Funny. What should your TP be for shorts? Simone. Check gold. Let me check gold. Yeah, gold's just hovering. It's lunchtime right now, so it's between 12 and 1 o'clock. Not much happens. You can go back almost every day and look at that time frame. So here's 12. Okay, between 12 and 1. With some kind of consolidation, you can go back in your day to the previous day. 6, 7, 8, 9, 10, 11, 12. 9, 10, 11, 12. There we go. That's now 12 o'clock. So we look at 12 o'clock over here. Yeah. Up until 1 o'clock. Over here. So it's within that leg. There's like a price range that gets formed. We go back in price, and we look at 12 o'clock to 1 o'clock, 12 o'clock to 1 o'clock. Dirty consolidation. Again, go back in price. We can do this every day. Because of these big legs up, it's gone up, it's come back, it's come back, it's gone higher, it's gone up, it's gone up, it's gone up. And it's formed these beautiful that has been sniped. I was going to say it's formed this beautiful equal high over here. And that beautiful equal high got sniped in the 1 minute, but let's see how that presents on the 5-minute chart. I would be seeking sell side for gold, but it's the same thing over here. Over here. Equal highs get sniped. Seek sell side for gold. Equal highs get sniped, sell side for gold. Buy side is the same thing. Equal lows, sell side gets taken, and you seek buy side. But this might not be enough of a kicker. It might need to go even higher. Like do this, and then come down. In euro. So come into that little volume imbalance that's right there. Is perfect equal highs at 0.7380. Let's see what happens there. Right after this. So, the value gap was invalid. Next price leg. Seeked highs. This is still going lower. Setting up lows down here. DXY. Already taken out sell side. Yeah, I'm expecting buy side. Again. This is Monday. How are you going to respond from there? Show me. How are we going to respond? So I'll be looking, depending on what price is doing. What's it? So 4 pips, yeah, I'm looking to see how price is responding from these levels. What is the difference between ICT and SMC? Since I thought he created it. What do you? So the ICT Inner Circle Trader version of smart money concepts is not the way that everyone understands smart money concepts right now. It's slightly different. He's more related to all the little things like this, what we're doing right now, where we're checking what price is doing from these certain levels. Okay. Yes, it can be simplified into a way that, okay, I'm looking at a lower low, a higher low, a lower low, as in a lower high, it breaks down, and then I'm waiting for a break of market structure for it to then start seeking higher prices. Yes, that is the simple way of doing it. Okay. His method of doing it is literally looking at price and finding all the little things that happen within price, all these little imbalances within price and how it reacts to the gaps that have been left. So it's looking sideways all the time instead of diagonal. It's amazing. I get mind blown every day. I think his work is phenomenal. See what's happening with US 500? US 500, like I said, as soon as I saw this big void here, I said it's extremely bearish. Alright, then you had a fair value gap just inside of there. Okay, that's your fair value gap. You could have taken this literally as a trade instead of a euro, okay, and gone to the lows and really been in profits if you didn't have super spread. But yeah, when you look at moves like this, especially like this, looking at buy side, extreme buy side being taken, and you're looking at 50% at least of that move, it returning back to this section right here. So that would be 50%. Seeking further downside over here. As you can see, that candle actually just ripped lower. So let's go look at GBP. It's going lower as well. It's going lower as well. Euro. As soon as those highs were taken, we've gone up and it's going to start coming lower. We're going to respect this EMA. Don't think so. I'm actually just going to remove that because now I honestly think it's going to come down. Again, we're looking at dollar and we're seeing how it's respecting this. And I wanted to give me a second stage confluence. Yeah, 100% for free. $100% for free. YouTube, Inner Circle Trader, or you can go onto his Instagram. It's at, let's Ghost in the Time Machine. Let's check. At I am the ICT with underscore between each of those. Okay, now a lot of people would actually be looking at this and saying, well, I see that there's a trend line, so I'm expecting price to break the trend line and go higher, right? I think we all could do the little time machine right now. But if you look at euro, euro's gone higher compared to GBP going lower. So in here, GBP's gone lower, Euro's gone higher. That is what's called SMT divergence, or smart money technique, or smart money tool divergence. There's two different forms of it. That's why I have this over here. Okay, that out. You see what's happening right now is that price is going higher and price here is going lower. Okay. Now relating that to the dollar, what's the dollar doing? The dollar is going, the lows are going higher. So if we see ever that the lows of the dollar are going higher and that the euro highs are going higher, that means that those highs are the same, okay, and the lows are the same. It means that there is some kind of divergence happening. Contrary to that, if you have the difference between the pairs, because they're correlated to the same thing, you're looking at the highs of each high that gets formed, as it's happening now, each high that gets formed, okay, compared to the highs of the other charts. So if I was to pull up AUD, see what's happening here. On the 1 minute, is that the 1 minute? There, we look from 1209 until now. Look at 1209 until now. We're having downward momentum on the pair here. GBP has downward momentum. Euro has got upward momentum. So what does that indicate? That indicates that there's some kind of weakness somewhere. And if we look at the dollar and you look at the up, down, and down, this is actually not respecting this. Okay, we have the highs over here. Do the same thing. So I've got a euro on this side. So let me put that to the 1 minute as well. Okay. Yeah. I'll pull this up over here. We have the lows, highs, the highs over here. That's going up and that's going up. It shows you that there's an overbought, oversold condition right there. You don't even need an indicator to tell you that something is overbought and oversold. Or this way, because you know that right now euro is pushing up, but dollar should be reflecting that. It should be down like this, but it's not. It means that dollar is showing strength and euro is also showing strength. But as euro has been showing strength all day, that divergence holds a little bit more weight. I'm just looking at Australian dollar. It's very interesting. Look how square this price is. That is amazing. London came down here, filled in this leg, that would be no fair value. We even got in here taking 50%. We've broken that up, but we're actually targeting this massive section of price right here. But that's what Australian dollar is doing. Yeah, pretty close. Couple of percent more to go. But what I'm thinking of doing actually is I'm thinking of actually taking trades not on stream, because what I've been doing is I've literally been waiting. I've been on stream. I'm only allowed. I've been like, my rule was only take trades while I was streaming. but there's been a lot of moves that I've missed. I don't want to miss. So yeah, we'll get there. Response 5 minutes. How are we looking? Probably gonna wait until like the 1 o'clock, and then happening here. So dirty. Monday, dodge day. Look left, we've broken this. Nice. Go on to 1 hour. Seven 4 into move that EMA. Don't need anymore. Seven 4:45. So I think that would be like the highest place that they could take it today, unless they just completely carry on going. We filled in of this section over here, come up. Like I said, I want price to come in and fill from this open over here to the section over here. But again, if it doesn't happen now, we're looking at tomorrow. I'm actually just enjoying reading price with all of you. Nice. Ultimately, there's a lot of liquidity built up underneath these lows. When I see a price like this, I'm just like, I want it. It's juicy. You can see the same thing on like anything. If you see all this price here, all these lows, that wasn't taken, right? Now it took the buy side and went down, up, down, up, down, up, down, up. And then later on, decided, well, those juicy lows are where I want to go to. Same thing here. Juicy lows, comes up, sets a whole bunch of juicy highs, takes the buy side, then comes takes sell side. It's really nice. You literally just need to look at all of this price and be like, juicy, juicy, juicy. Comes and takes it. Nice. Honestly, I'm so short. I'm so short on these currencies. I think dollar is going to carry on being really strong. Excuse me. But right now, again, we're in lunch, so we've got 16 minutes. Just chilling for a bit. Let's see where they want to take price after lunch. What normally happens is during lunchtime, they set up the liquidity, and then just like before, like I mentioned, they take, so like say for example that this is 12 until 1 over here, okay? What do they want to do? They want to raid price lower to take out all the sell side, and then after that they want to take it higher and take out all the buy side, and after that it can do whatever. The same thing kind of happens at 12 o'clock. So let's just take this and go into the 15 minutes, have a look and see what's happening. 15 minutes, that's all been taken. That's all been taken the previous day. Daily highs, where's our daily? Now we have 1, 2, 3, massive monster push after this. 4, 5, 1. Yeah, so it's a bit more high time frame. This price right here, I expect them to put it lower, but they could take it to where it is now, maybe to consequent encroachment, which is that orange candle, and then pull it back. But we have now a massive volume imbalance on the daily, right there. That right there is a volume imbalance being set up in front of our very eyes. Marcus, no worries, my man. No worries. The higher time frame, we've taken out buy side, okay, over here in this candle. We've also taken out this candle, so we've taken out multiple buy sides, and we've left a volume imbalance. So if it wants to still gap higher, this later on becomes a very important piece of price action for later on. So if price does want to continue going up for the week, it will come back at some point here, and then later on, if it's bullish, continue going higher. But that is your important level on the daily. Yeah. Sorry about all my random arrows. Yes, I do like doing higher time frame, as you can see in my higher time frame analysis. It's very, very clean. Okay, it's all at the same place. Set up all the buy side that we can go to, or the sell side that we can go to initially. If it breaks this, I'll be looking at that sell side, that little volume imbalance in there, possibly this sell side, but most probably these fair values. What's the time? 47. So again, if we're looking at 950 to 1010, 1150, 1050 to 1110, then we're looking at, what's the next number? $12.50 until 110. Here's 500. Showing us, actually, let's go higher, lower. Breaks. How to trade flip OB. What is flip OB? How's GBP looking? As I said, when I pointed out the divergence in the chart, the SMT divergence between Euro, so that up again over here, Euro right there, you have GBP over here with dollar showing strength from that point. GBP is looking like a nice little short. If you got in, because I marked this fair value gap out like a long time ago. Okay, and if you were trading that, you could have taken that entry, put it above the fair value, and then gone just for like a 1-to-1 or a 1-to-2, or possibly where I'm looking for price to go is down here. I'm looking for down here. Why don't I have a YouTube channel? I do have a YouTube channel. I actually used to game. I used to game a lot during COVID. But then I was like, no. I've got a family, I have a child. So flip OB, I assume, is demand turned to supply order block. Flipped order block. But again, with this price over here, yes, it's getting weaker as in it's getting weaker while Euro has just responded to it. Okay, so look at AUD. AUD's tanked. Look at that, beautiful, absolutely beautiful. So that was a classic case of live watching SMT divergence live. The lows over here, breaking up to go higher. Euro right over there, breaking from this equal highs over there, snapping, going lower. GBP just continuing that trend lower. It's on multiple times. Right here. Oh, look at that beautiful, that void I said that was important. If you remember. Right there. Prices came back, tapped into that, and then, hello. Let's go down. I expect gold to be doing the same thing. No, still consolidating. Then once that initial break, alright, if price wants to go higher, okay, let me look at this quickly on my, so I keep on looking at my second screen because it's where my broker is. I look at the 1 minute, so look in volume imbalances, making sure that volume balance is tapped in beautifully. So this square action over here, higher, lower, breaker block. A volume imbalance just in, yeah, price is that. 5, 2, 7, 5. Volume balance right there. That is being supported by this breaker over here. If it wants to go lower, I don't want to see price go more than 50% of this wick. So my phone just died. Plug this in. Yeah, bro, lucky breakdown. Gold again, gold, nothing's happening on gold. It's just some consolidation. But other pairs are moving. It's interesting seeing what price is doing, especially on a day-to-day, with all of that weird, funny news that has come out and instantaneous. Again, I'm just going to take this, put it back, take this. That was the time zone for that. Buy side. Expected that to go higher, came into this one to go higher. We now have bullish. See. We'll have this. Or we could just continue dropping at the buy side over there. We'll set it for later. So, divergence is still there. Still, wicks, this section over here, that goes lower. I have oversold DXY. I have overbought GBP. 0. That's respecting that level. Goes past this. I wouldn't want to be in anything. I know, Marcus. It's just for people that, for example, like for these trading things, it's not necessarily just learning. For other people, it's also they are actively trading and they're looking for a community to kind of see if what they're saying, if they're thinking the same thing or they're thinking something different, or even if they just use it as a medium to be like, you're wrong and I'm going to fade every single move that you make. It happens a lot. So Marcus, about trading at this time, as I was saying, it depends on the trader. Some people, their models are within consolidation zones, and some people, their models are like the classic ICT models. I'll show an example. If you're in like a classic consolidation, okay, when you see price doing this kind of dodgy, what people can do is they just literally set 2 lines over here, and when price comes up over here, they sell and they take to like 50% or this, and then as soon as price comes down to this level, it starts bouncing up, they buy, and then it takes to 50%, and they keep on doing that until it breaks out of the range. Like there's so many different ways to trade. Like there's no wrong way to trade. If you get what I'm saying, it's just your model and how you understand what you're doing in your model. As I said before, like my model activated early on at the time that I wanted it to activate, and it was perfect. Now I'm just seeing what's happening for the rest of the price. Now let's go look at US 500. Interesting here, so US 500 is getting response right now. What's the time? I want to see what happens. So getting a nice cheeky response. That's 1 o'clock. We'll see what happens. MMSM. What is MMSM? Market maker shift model? Don't know. The US 500, what I'm looking at is just shorts from that void. It's just short all the way down. Market maker sell model. Yes, okay, I understand what you're saying now. Yes, it's been in sell for a while. Over here. So that was from that void, that was your perfect entry. Oh yes, now we're getting some movement. Let's have a look. So we come into this imbalance, which is nestled within this imbalance as well, and we're getting a movement out of it. So we're going to see, is the liquidity set up here enough for them to snap downwards? Sorry, is it enough for them to snap downwards and then go out of it for the buy side? Or is that sufficient enough for them to just expand out? Because I'm expecting buy side. That was set up beautifully. Look at the 5 minutes. Oh, are you talking about DXY? Oh, la, 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 la. I love seeing this. Look at this. Just came past the 50 and then reacted beautifully. Let's see what the chart is saying. Okay, we have lower. On the top. He's still telling me. Still going lower. Euro has just shifted. This might be interesting. We could have the start of an afternoon short. This is a thing I was trying to get to. Yeah, so it's a very common thing between New York morning and New York afternoon. Is that in the New York morning, they will. Where's the morning? The morning is right over here. Okay, New York in the morning. Price has gone in one direction. In the afternoon, the general expectation is that it's going to come back. Not necessarily to the lows. Sometimes they can go to the lows and just create a massive wick and just continue going lower. Netflix price has increased monthly bill. Should we look for selling? I don't know about Netflix. I don't necessarily trade. I don't trade Netflix or Tesla. I don't trade individual stocks. I just trade the US 500 and Forex. Gold's going up. What does that mean? If gold's going up, it means that AUD should be going up. But it's not. It's going short. So that's interesting. That means that they're buying dollar. Is dollar. Still within this little cozy expansion range. I mean, this consolidation range. After this little, let's see. Look at all this juice on GBP. You can literally just see, it's like tasty. All of that, every single low here has not been seen. They need to bring price down to that. I'm chilled the other way. But for my I think I've got OCD. And it's like, just like over here, how price has created all of these, highs in here. Like I want price to come up and clear that out. It's like down here, I want price to come and clear all of this out. It's like, it's not clean to me. Not clean. All the way down. No. That's just too dirty. So dirty. Price is chopped dirty today. Sales are holding. They won. If you're looking at it in that perspective, still not in the time range. 10:10. Yeah. After this candle gets finished, we'll see where they want to take price to. you're a super retail, you're looking at this. How do they do it? Big. Coming down. Is that a descending triangle? Yeah, today's an interesting day, just for price action of itself, because of the news that has happened and because of the shift in time. Things are all in a different segment. So if we've had price on Australian dollar going down all day, then it's actually balanced. It's actually balanced price action. It's what euro should have done. GBP should push down. I'm still like, my bias is held. I'm just waiting for some kind of manipulation to go into the afternoon. We'll see. USD CAD WMMBM. I can make a buy model. USD. So USD getting stronger. CAD getting weaker. Have a look at that. Definitely. You see our dollar's strong against the Canadian, and it's pushing. Now it's coming down. GBP strong against the dollar. Euro is strong against the dollar. Oz it's weak against the dollar. We're coming up to that point. Just tapping into it now. See what they want to do. So I've got a smile on my face. I love seeing this. It's broken down right over here. Now if we're going into here, move all of this and go into high time frame with our inwogs. That is just about to be taken. So how it responds once taking it. GBP hasn't pushed up. So here we go. In our dollar's weak, GBP is still weak. Hasn't pushed up. Euro, different story. Euro is pushing down, and this is the same, exactly the same. GBP is not there. Can you see what I mean? That 50% of the candle, as soon as it goes up into there, I wouldn't want to be in the trade. So even though price does come down, it's likely to go up. Still looking at this divergence over here. This is manipulation. Pure and straight manipulation. bad. USD is still pushing up higher, still strong. 2-year, 10-year. Gold's pushing up. AU is pushing up. So I'm expecting GBP to go up. Interesting. So the anatomy of a candle. Where did we open at midnight? It's over here. Right. Now if we look at the anatomy of the candle, that was open. We've got, if it's going to go higher, we've got the wick. Got price going higher. And then price coming down. And so your candle would look like this. If price were to close at midnight around this area, that's what the candle would look like. If price continues going higher, we have a tiny little wick over here. What would we look for the candle to look like? To close around there. Or that's a second buy side yet. You're waiting now. What I'm waiting for is I'm waiting for price to show me. Okay. So this could be the high of the session. Okay. Now it's broken it. And it's done some price action over here, but I'm waiting for it to switch. So I want price to go from here, set another low, set a high, break it one more time. That fair value gap, that would be my entry. Otherwise, that just means that price is just going to continue going up. Like, how does each candle, how is it that perfect? You zoom in on this and you think, how is that so perfect? Literally, each of those candles the one little one, oh. I will probably wait until London. Just depending. Again, if price does display this, then what we're probably going to be looking at, again, like I said earlier, if we're not entering now, we'll be entering tomorrow. But this dirty price action over here, there was a leg before it that needs to be cleaned up. Okay, and there's also lots of price under here that I'm trying to target. If we are looking today, I would want to see price at least come down to this 50. And then in London, probably possibly go up, break that, and then come lower. Or it could just continue to go up like this and sideways, touch that constant encroachment in London, and come lower. Like it's going to show you something. But you have to always just wait for it to show you what it wants to show you. Like right now, what is price showing you? Price is showing you that there's a leg up. You have consolidation over here. The leg. here's your consolidation in that section over there. Making that kind of consolidation. Now, from consolidation, price can only do one thing: expansion. Means that you either see another leg up, or you'll see some kind of squaring for that leg up to be your initial set for a reversal to go down into, again, consolidation, and then so on and so forth. There's not much of an afternoon macro. Most of the afternoons, it's kind of the same as US 500. So right now, this price has come back. This price and this price over here. Again, it's tapped it. It's almost tapped at 50. Perfect. It hasn't tapped it though. Ultimately, I'm still short on US 500 until objectives are met. But this could have been the objective that was met. The value gap in here. As you can see, US 500 has worked out beautifully. We're trading. Euro, not so much. GBP, it's been an inching along day. Wish the spread on this US 500 wasn't as big as it is. Be nice. So just quick tips. Whenever you see on the 1 minute chart, price doing this. Okay, this is like serious. This is it's like bouncing up. There's a whole bunch of orders going in and going out right now. Okay, why? Because that is after 10:10. I mean 3:10. Right there, it's 3:10. This candle. Okay, right here, that's 3:10. So you got all the orders coming in from there that they're hitting, and we're going to see what they want to do. Are they going to take here and then seek sell, as in for a little bit of a pullback, or are they wanting to actually just initiate a complete monster pullback? I don't expect much because there's no news drivers. But for like an afternoon, kind of New York afternoon thing, if you're looking to take a short, maybe just to 50% of that leg. You know, if you're taking a long, you just take the previous leg, which is this one over here, okay, or this one over here. Draw that up. You look at 100 to 200, and then you project up to the top, and that would be like your max. Longs, again, if you're the shorts, 50% of the leg, could possibly come here, snipe up down to there and go down lower. You never know. But again, you have to just wait for your model to initiate in price. As soon as it's done that, then you're able to do whatever you want. So I'm just going to change this to a 2-hour chart. No, this one. This one. I'm going to change it to a 2-hour chart. Okay, we're just going to look at what happens in price and time. Right here is kind of where New York opens, right? In the 2 hours that trades, that is your morning session. That is your afternoon session. Down, up. Go forward in price. 579. Okay, 921. We have 921 down, and then we have afternoon session to the next day. Up. Funny how most times it kind of will be like that. Sometimes you'll get a day that's different. You have from New York Open, which is over here, to lunchtime over here. Price has actually technically gone up over here. In lunchtime, at 1 o'clock, actually ends up, even though it was very down, as in like retracted in price. Time wise, it's higher. Right, does anyone have any questions or anything? I think I'm going to end it there. I'm 20 minutes over where I normally have my stream. You know my kind of bias generally for the day. We've just set up some, on the 1 minute there, you can see those are some really nice highs, equal highs. Liquidity above here. We also have your liquidity down here as well. On the side of here. If price doesn't do anything, like I said, look out for the Asian session slash London session for it to make some kind of move back within this range. It leaves that big gap on the daily price actions and then move vertical. Okay. On the daily, because I'm not going to be here tomorrow, if it leaves this section of price in here, then you know I'm actually putting that to my higher time frame thing now because it's a volume imbalance. If it leaves that open, I will expect price to sometime find a way down. Either it needs to take this or take this and it needs to come down, tap it, or it's going to start coming down tomorrow and take it to then expand higher. Or it takes it, expands, comes back to that buy side and goes to the sell side. Anyways, let's see. So how can I trade Asian high and low on London Open? Look at liquidity, where the liquidity is. You see a whole bunch of liquidity being formed on one side, then as soon as London opens, you then start targeting that liquidity. It's actually ICT does a very good breakdown of the Asian session, but it's actually a very interesting session to trade because there can be moves, but they are within a very small range, so there's not many pips to be had. So that, as in sometimes it can actually move massively. Sometimes it's random, but you have an Asian session that is literally the mover. Like the Asian session will be this whole leg over here. And the rest of the day, so let's just say this, the Asian session will be literally this whole leg over here, and then this is the rest of the day. I've seen that happen. But yeah, if this closes over here, somewhere over here, I would then expect price the next day to then take it, or Asian to come down, and then for Euro to come up and come down, or somewhere, because we have this I don't like using the word unmitigated, but it's this piece of price action in the daily right now that there's a gap there. And if you look at the dollar, really fighting. It's really fighting. Lower, over here, higher, look at this one. Low on GBP, low on DXY, which means that DXY is now considered to be oversold. Bro. He was having one of those Monday days. Monday days. Bullish RSI divergence on DXY. DXY. I don't use the RSI, so I wouldn't be able to know that. It depends on your position size. I mean, anything can happen in the market. So if you've taken like a super small size of like 0.01 lots or something like that, then you could probably hold with no fear. But to be honest, this whole price range over here is going to be manipulated and it will come down. It happens every single day. If it doesn't happen that day, it will happen the next day. Sometime it'll come back into there. And if it doesn't come back into there, then it's one of those random black swan events, which we are actually in at the moment. Interesting to see what's happening with price, but we are actually in one of those moments where the banks are crashing. Okay, now this whole Silvergate scandal thing that's happening in America right now is not good for the world. Not just for America, but for the world. Because a lot of companies, international companies, like crypto companies and stuff like that, they have billions of dollars in those banks. Now, if those are taken off the market, those are all bought in dollars. Now, for instance, there are no more of those dollars to be sold for other currencies to be bought. So that means that our other currencies technically shouldn't be going higher. Yes, they might print money to repay the debtors, to repay the people, but that printing of money is a very short-term thing in light of the very high risk that they're putting on. So this is actually something that I wanted to show you. I wasn't able to show you this the other day. Government bonds, 2-year yield. Okay. They are expecting to raise government bonds to around 5%. Okay, which is up here. Around this big gappy over here. They failed their target, which is what the Fed chair said. So we're looking at over 5%, which is there. The dollar's been trending with this market right now, and we're looking at the dollar having just broken all of this stuff. You can look on the daily. Okay, dollar's down here, yes, and it's just snapped that out, but it is going to come higher. We look at the 10-year. Now the 10-year is going to 5%. Shows you a bunch of dirty dirt over there. Let's see if we can pull the weekly. So the last time that prices were at above 5%, which is what they are indicating right now, okay, was during the 2001 crash, crypto.com bubble. The next time after that was 07, 08. That crash that came was not initiated by anything. It was initiated by, yeah, you know, okay. And then they start printing money to save the economy. This time they can't print anymore. They have to keep on rising rates until it gets there, possibly even higher. So ultimately, if you have very low, like a low risk tolerance, just get out. Don't be in a trade that you don't want to hold. If you have a high risk tolerance, You do your thing. I'm not a financial advisor, so your trades are your trades. I just indicate where I think that the market's going, with a lot of research and probabilities in place. So, Hugo, where did you actually enter your trade? I just want to mark it out on the chart with you. And really good saying. Mastery is when an archer knows when not to shoot the arrow. This is actually, wouldn't necessarily say when not to shoot the arrow, because you can always shoot the arrow for practice. But if you feel like it's wrong, don't do it. Like if you're not trusting yourself and your confidence and your methods and your take profit and stop loss and all those kind of things that you've put into place to protect you, then you need to be getting out. Yeah. Like I said, I already hit my trade for the day, and because price did not retrace. But if you see what's happening, DXY has come back to 50% of the range, and then it's doing what it's going to do. Now, what could happen, as I said, same thing here, is it could go higher to come back lower into the sell side. Now, I like DXY, not DXY, US 500, and because it's just so clean. Even though this was chop in price, watch, I'll go through this with you. I'll go through this with you here. Okay. Now, if you had proper risk management, okay, which we should all have, okay. Now, as soon as this blue candle's broken, that's break 1. As soon as that's broken, that's break 2, okay. That's when you know that your trade's going to form. That didn't happen, so that's invalid. Okay, we look over here. This whole leg needs to break, get broken, and then it gets broken again, break 2. That didn't happen, no trade. Goes up. This gets broken over here, this blue candle, that's break 1, and then that sets the red over there to that blue over here. That second one has to be broken. Break 2 didn't happen, not a trade. This big red candle here to the blue there, okay, that gets set up, it comes down, it's equal. It has a break, has a blue, comes up, breaks a second time, then it comes up to some form of inefficiency. So whether it's your fair value gap over here, or whether it's drawn throughout void or whatever it is, and you short. Even in price chop, there are ways for you to trade, as long as you're able to just watch and wait. So like right now, if I saw price doing what it's doing right now, okay, which was set this up, that for me would be break 1. As it sets this up over here, that for me would be break 2. So I'll be looking at some form of fair value inefficiency on the inside, but because I would have been in a sell from there, I would have then looked at this point to take my trade off, because it looks like it's going to the buy side. And 36, 37, yeah, the high. But yeah, so that's the method that I use to keep myself from A, from overtrading, and B, from like getting in at the wrong place, right? So here we're looking at this. This is as this sets up to up here, we have this over here. That's one. My market structure shift would be if it broke down here. That didn't happen. Okay. Look over here. That sets it up. That's one. That's two. I would actually be looking for a short from here. So holding that short might be viable. But again, it's not 100%. Like I said, it's like just over 45 to 60%. You can see, so this is a good example of that, of the chop. So we have chop, we have this low, that's one, it's broken, that's two. Now I would look at that as a buy if I was looking at a buy day, and I would set that there, and I would put my stops underneath this fair value gap. Sorry, that fair value gap there, just underneath it, I still would have been stopped out because price came down and then went back up to where I wanted it to go. Those highs, and came down even lower. That was just one leg. Now that for me, again, is a sell, because it's a big, chunky, lots of candles that are very different. But price doesn't want to go there. It's here. It has to break this one, set up a new leg, and then do another one. It doesn't want to do it. Further in price, it goes higher, it goes higher, it goes higher. Here we're looking at break. It would have to break that low. Doesn't happen. So I'm staying out of trades. I'm not getting into them. This is interesting. Now GBP is going higher. So now GBP has just taken that buy side liquidity. Now it's caught up to EU. DXY is looking like it's dropping hard. Right over here, what's EU doing? It's hovering. Do they want to take this, carry on running the buy side, do your consequent encroachment, all that kind of stuff, or do they want to snap this high and go lower? Depends on where they want to take price, and you have to read it in context of the market. On the 30-minute charts. Which, your bullish order block or your bearish order block? NAS is actually doing the same thing like US 500. It's going down. But there's not much range for NAS. Not much range for it to come down. US 500, it's just gone above the weekly opening gap in WOG. It's gone down, tap that, come back in. I think it's just going to be a chop there. So again, which order block are you looking at? So if you're looking at this as an order block, you're looking at the full range. As in this whole range from here to here, those red candles Okay, that's your order block. If I was to put that into a 4-hour chart, you'd see. Chart, let's see. That was your last down candle over there, as you can see, the last down before the shift up to break that there. That would be your, like, it's a big order block. That's how I view it on the 1 minute chart. So on the 1 minute chart, I don't look at a candle as an order block. I look at the whole leg as the order block. Unless it's one candle like this, for example. This would be my order block right here. From here, here, that would be my bearish order block. Bearish order block. But let's look at where structure shifted. Shift, that's your bearish order block. The last blue leg, the blue candles, just before it goes red. In that leg that broke. That's your bearish order block. I'm a short-term time frame trader. My setup is not order blocks. My setup happened earlier. Just here. This was my setup right there, that leg. Price came down, came up, took out this buy side liquidity. As it came down, it broke this, created a fair value gap, traded inside of that with my highs just above that fair value gap, and I took that to 4R. It's right there. That was my trade. Done. Then afterwards, it's just been doing, like, setting up a whole bunch of liquidity. This is massive liquidity. You're going to see they're going to target it. It's going to be huge. You might see in Asia, you might see in London, but just be prepared for all of this to be taken. It's going to be nice. Or it might just start from here. It might just go down, come up, and then go bang when there's news. Do you have any more news coming out today? No news today. More news today. 8:30 is the next news, and that's CPI. So going into the next day, I'm expecting consolidation of some kind. Either it's going to consolidate sideways, or it's going to go like a little going up or going down, and they're going to use that as the means to snap all of this beautiful liquidity over here. But anyways, SMT, sometimes I look at SMT divergence as well, especially when I can't see price clearly. I'll look at SMT. So for example, if you know that there's a whole bunch of highs over here, right, you can see clearly that, so let me just, see clearly that this is buy side. Okay, now we have a whole bunch of like lows and stuff over here that are being set up. If that happens within a time frame, I then look at SMT. So what I'm looking at the lows and the highs of GU, for example. So I'm looking at this going down, and I'm looking at there, that was the crack right there. That was the crack. that going down. So if you see right here, our price went from here down and then lows down, and then they form the same kind of channel. That showed me that GBP is, sorry, this is not the same. This is, I'm showing you DXY charts. For this scenario, we have this low to this low, and we're looking at lows as well. So then what you're looking at is you're looking at from there to where that is, that's going up and that's going down. It means that euro is oversold and GBP is pushing higher. So as soon as you see the equal lows being snapped, you see that divergence, even though it's not the time frame that you trade, you could look for a break of some kind of structure and literally trade the very, very first like fair value gap, order block, whatever it is that you get, even if it's higher on in the day. Looking at the 30 minutes, I'll check it for you. You're looking at the bullish order block. On which bullish order block? The Humu? Which one are you looking at? Okay, US30. $30 in threshold of the bullish order block. Are you talking about this? Yeah. Because for me, again, this is bearish price action. It's had massive moves to leg down, it snapped liquidity, come down, it's come down. Equal highs formed up here, which could be a draw. The Dow Jones Industrial Average. But that was your mean threshold to go short on the order block. Last candle that's up and the last candle that's up. That was your mean threshold to go short. Doesn't New York kill zone shifted today? Yes. So whatever time frame you're in, they have daylight savings. So they've moved it forward in time. So if you were previously, if it was like, say it was 4 p.m. for you, it's now 3 p.m. That's an example. Alberto. Yes, my man. Let's have a look at what you're doing. Actually, having a look at this is interesting. Just checking the last order block and seeing this US30. Fascinating. Last candle, mean threshold. That's an entry all of its own. You literally just take it from here, put it under the lows, and just trade it to halfway in the range. That gets respected. You put it halfway to there into the middle of the previous range. It's taken, it gets taken, it comes up, hasn't respected this one though, has gone higher, but it's respecting this one. That could be a short trade. The highs being above here, middle of the range. Wow, that's an interesting technique that you're sharing your trade idea. We're looking at euro right now. Short. Yeah, that's afternoon. The market is going to close at 4 o'clock. 4 o'clock, 5 o'clock. If in any whatever moves, I am expecting at least 50% of this range still from here to here. I'm expecting at least down here. These lows, preferably. Let's see what the lows, yes. Here we are. They could just carry on driving price higher. It might be one of those trending days where if you're in a sell, you're going to continue to just get shafted and shafted and shafted and shafted. Five minutes showing nice characteristics. I like that. I wouldn't want price. Just looking at this and looking back over here at this whole section of price action right here. It was like nice and choppy. Okay. This is going to be an interesting level, I think, during the week. Even though, again, I'm going to put my 11s. Okay, I can take 2 of them away now. So let me just take that. Two. Price right now, where it's standing, does look quite bearish. It needs to revisit these price points right here. All of this down here needs to be revisited at some point. Price action higher, it's gone lower. It's broken. We're looking at the last. See, if you are thinking that it's going to go short, it means that DXY can't break main structure and continue driving higher. What's nice is that it's actually filled out that complete that those weekly yeah, completely filled in the weekly opening gap, both of them. Nice. So the next objective, if it's short, would be going towards the next weekly gap or retracement back into the previous weekly gap and this massive range over here that I spoke about before. And because this is all nested within each other, you got 2 weekly gaps, 3 weekly gaps over there. You got opening gap, weekly opening gap, weekly gap, opening gap. This section of price action over here is very, very important. Very, very, very important later on. Yes, I'm going to call it quits for the night. Thank you so much for taking your time out to chill with me. I appreciate it a lot. And yeah, looks like price has reached its ultimate high and it is pulling back. But again, using that price action, you'll see. Again, thank you so much for chilling with me. Appreciate it. If you've liked this stream, if I've given you some kind of interesting stuff, just like the video. And yeah, thank you so much for tuning in with me. Let's put this one on. There we go. Thank you so much for tuning in with me. And I will speak to you either on Twitter at the only Gentsla or in 2 days. All right. Have a fantastic morning, day, night, whatever time it is for you. It's 5 o'clock. It's 5 a.m. for me. So yeah, that's how it is. Cheers. Take care. Thank you so much.